All right, good morning, ladies and gentlemen. Good morning and welcome to the classroom. It is 9 a.m. on a beautiful Thursday, this 20th day of July. Outside temperature 65 degrees. It's sunny. We're all happy to be here, full of smiles and love in our hearts. All right, guys, just kidding. I'm in an awesome mood this morning. Good morning, Jay. Good morning, Bobby. Good morning, Safia. 65 where I'm at. For now, Tony, it'll be 105 by the time I get home this evening. So I've got about a 40-degree fluctuation on its way today. Good morning, Mike. Good morning, Zeba. That's exactly what that was, Bobby. That was my radio host. It works out because I do have a face for radio, so it works perfectly. Good morning, Jose Trades. Guys, I am in an absolutely fantastic, hey 10K, good to see you in here. Fantastic mood this morning. I'm excited about the day. I really am. I am in southeastern Washington. We're in what's known as the Tri-Cities area, kind of on the border of Idaho, um, just above Oregon. It's high desert here. So I went from lush green Cascades Mountains, and here it is. It's scrub brush and beautiful. It's beautiful. It's just a different kind of view. So pretty cool. And then next week, guys, remember that you get John Novak next week, all week. Man, I hope you come out of the woodwork and pick his brain. He's got a full week of running this classroom. And guys, talk about opportunities and patterns. Man, Bobby, it's amazing that I can move around. And what a lot of you guys don't realize is that you can move around too. When you day trade for a living, you can do it anywhere. You can go spend a couple months in Europe, right? And you can still make money. You can load up the family truckster, go from coast to coast, and you can make money anywhere, guys. Um, and that's what we're going to focus on today. How do we get to where we want to be? How do we get to that end goal of being consistent, right? Of being on the positive side of things every day. And I'm going to tell you, waiting to get profitable and start your moving around. I like it. How do we get there? Do you know what? So I got this picture this morning. Have a chili dog for breakfast. Amen. You ready? Here's our picture for the day, guys. I'm going to open this up for you, and this is going to be our battle cry. We're going to keep it simple. I'm talking to all of you right now. I'm talking to you new users especially. Guys, this class is designed to give you, absolutely I will, Jose. Um, this class is designed to give you a foundation. This foundation is going to take you anywhere that you want to go. Guys, I'm going to focus very, very simply on one trade for the first hour of this classroom. I'm going to focus on 3 rules that happen on 2 charts. I'm going to focus on a recipe that's going to teach you how to recognize a trade that wins more than it loses, right? And if you're winning more than you lose, guys, you're making money. And that's the plan. The plan is for you to be able to walk out of this classroom after a couple days, to be able to study this look and to get excited about it, right? To want to do the work so that you can get to where you want to be. So we're going to get simplicity. You guys, with all this noise, all these different charts, all these different trades, all these different scenarios, and you're wondering, why the hell can't I make any money? Guys, it's because you're spreading yourself too thin. If you're chasing 4 trades and you're not excelling at one of them, then what you're doing is you're taking all that attention that belongs on just one trade and you're diluting it, right? Your ice cubes in your beer. Your beer doesn't taste as good if you ice it down. So guys, focus on simplicity today. Keep it simple. Um, and insist that your world is an easy one. Consistency, that's what we're looking for. But before we do anything, let's check that news. Let's make sure there's nothing going on that's going to make this world kooky, crazy, upside down, too fast to trade, maybe changing directions. And guys, we're going to do that at forexfactory.com. I'm looking for high impact and I'm looking for medium impact news. These can be market movers. They're not guaranteed to be market movers, but if the market's going to be erratic, it removes my advantage, and I'm all about advantages, guys. So at 8:30 a.m. we had unemployment claims. They seem to be doing great. Nice job, everybody. Philly Fed Manufacturing Index. I don't know what that means. I'm assuming it has something to do with Philadelphia, and it was negative, and I don't know, maybe that's bad. Good morning, Debbie. How are the grandbabies? Doing all right, I hope? But guys, I'm not concerned about what it says. I'm concerned about when it says it, right? I want to make sure that I'm not jumping in front. Good. I'm glad to hear that. At 10 a.m. today, we're going to have existing home sales. It's a medium impact news. It may have an impact on your trading, right? It may make it spike up, spike down, change direction, one way or the other. So at 10 a.m., guys, I want you to write a note on your paper. I want you guys that are good at following it to post it in the room. Hey, guys, 10 a.m. news coming. And let's make sure that we don't jump in front of that freight train of emotion. And then everything that we talk about, guys, is from the education page. There are zero secrets with Nexgen. I don't hold back on you. I don't give you just a little bit and hope that you figure it out. To be honest with you, I give you as little as I possibly can, but I will give you everything that you need to be successful. I promise. And it's a two-part process, guys. This is a relationship. This is a symbiotic relationship. I need you, otherwise I have nothing to do in the mornings. I'll probably go knock over a liquor store, get in trouble. And you need me, because I'm going to teach you, I'm going to talk about in great depth trigger line and Fibonacci rules for when it's okay to trade. Guys, there's a step-by-step process to becoming consistent. And it's been proven time and time again. Post your trades in class, guys. Post your trades in class. If you're on day one, start posting trades in class. Start posting pictures in class. Start posting questions in class. Go ahead and get comfortable with the idea that the more you participate in this class, the faster you're going to get to where you want to be. I have been teaching this class for a couple years now, and that has been a gospel truth. The people that post the most make the most money. The people that post the most get to where they want to be the fastest. The people that are sitting on the sidelines hoping to absorb it rarely get to where they want to be in the time frame that they want to be there. The next thing is you're going to use a spreadsheet. Nexgen gave you a spreadsheet. And your spreadsheet, guys, it's the most amazing tool you're ever going to use. It's going to do two things for you. This is my spreadsheet. The first page, every time I simulate a trade, every time I take a trade in the live market, every time I pull the trigger, I'm putting a picture into my spreadsheet, and I'm talking about the advantages that were present, and I'm also identifying the advantages that weren't present. I'm recording whether I won, whether I lost, how I felt getting into the trade. And guys, you're going to fill this up every day. If you take trades today, there should be 10 spaces filled out in this. Because what you're going to do is you're going to go back tomorrow. Friday, you're going to wake up and you're going to say, oh, I can't wait to be a day trader today. But you're going to say, hold it, pump the brakes. I'm going to go back and see what I did as a day trader yesterday. And I'm going to study those trades that I took. All right, give me just 1 second, guys. All right, I'm going to give it a minute for everyone to come back in. It's odd that in the beginning, maybe there's something going on with Discord in the beginning. Sorry I kicked you guys out. I'll give it just a second for people to get back in. Right now, everybody's wondering what the hell just happened, so sorry, guys. And we'll give it just a second. People will get back in here, and we'll get exactly where we need to be. For those of you that are in here, Drosks, are we okay? Walter, is it here? Scotty, can you hear me okay? TJ, Debbie, is it better now? I did a full reboot. I'm trying. I'm not sure what's going on. Good morning, Scotty. Hey, welcome back to the room. Nice to see you. Abdulaziz, nice to see you in the room. It's been a while. Black, I'm going to assume this is Hippocrates and not hypocrite. I could only see half of your name, but welcome to the room. Yeah, there it is. Cool. I assumed. Welcome to Nexgen, man. It's good to have you. Zeba, you can't hear. Can everyone else hear? I'm wondering if it's Discord on y'all's end sometimes. So we'll get Zeba to reboot too, right? And everybody's coming back in. I'm going to give it just a second, guys. And no worries. We'll get to where we need to be. You can hear? Good. Good, good, good. All right. Here we go. We're starting to get back in here. Bobby T is going, where is everybody? He's off in the distance, right? Guys, every morning study your trades from the previous day. It is a very simple process. It'll take you 2 to 3 minutes, literally 2 to 3 minutes to go back and look at what you did yesterday. But asking yourself these simple questions: what worked for me? What didn't work for me? What felt easy? And what felt forced? Awesome, Zeba. By answering these questions, you're going to begin to realize a lot of different things. You're going to begin to realize the patterns that are bringing you success, right? And those patterns that are bringing you success are the ones that are going to keep you feeling relaxed. You're also going to discover those things that you do that are maybe hindering your success, guys. And what you're going to do is you're going to begin to recognize patterns in yourself. More importantly, when you post those trades in the room, I'm going to recognize patterns in you. And guys, there's not a trader in this room that's posted more than 10 pictures that I haven't been able to help them through patterns, right? Hey, this seems to be your challenge, and this is what you need to work on, and this is what you need to focus on. I can't make you focus on it, but I can at least help you realize it, because a lot of the times, in the heat of the trade, we're making mistakes as a brand new user, which is perfect. It's exactly where you should be. But the key to that is to get those pictures in the room so that we can talk about those mistakes, so that we can work together to correct those mistakes. So you're going to do that, guys. You're going to post your trades in class. Black Hippocrates, all of you guys that are brand new, I'm looking through all my names. I've got so many. Lil Saigon, same thing. If you have a question, ask that question, but let's do it in picture form. So guys, I'm going to open up TechSmith Capture. If you go to your search bar, you're going to find it. This was downloaded on your computer when you got your software. And when I click on TechSmith Capture, it's going to come up on the wrong screen. So I'm going to slide it over here. You're going to see that icon down in the very bottom of the screen. We don't need to see the Q. And this is how we have a conversation. So I'm going to go to the charts here, guys, and I'm going to click this great big capture button. And once I do, I'm going to click and drag from the top left to the bottom right, guys. And I'm doing this so that I can line up prices and so that I can line up timestamps. And what that lining up does is when I hit capture an image, it gives me that preview. But I can say from this area right here, that coincides with this area. I can line it up on the timestamp. I can line it up on the price, and it makes it easier for me to see exactly why you did what you did. You can use shapes, and you can, if you have a question about a specific area, about a specific thing, maybe you're wondering, hey Mark, what does this magenta line mean, right? So you can point an arrow to it. And then the most important tool that you guys are going to use, and those of you that are using checklists, copy pasted onto your charts, I'm going to encourage you today. Ditch your checklist in the copy paste form. Too many people just phone it in. Too many people take that checklist and they're like, well, I probably don't have this rule met, but I'm going to mark yes, because if I mark yes, it makes me feel good about breaking my rules. So guys, I want you to take that call out and I want you to write your rules on the chart. Write why you did what you did, right? If you put something on the chart, if you say, this is that, right? This is a thing. I want you to ask yourself, so what? What does that thing mean to you? If you point out a termination condition, tell me why you're pointing out a termination condition, right? I'm pointing out a termination condition because rule number 2 says that I'm not going to trade into these. I am talking. Guys, can everybody hear me? Yep, we're all good. Here, reboot. Right on. So guys, if you're going to post charts and you're going to identify things, how do they refer to your rules, right? Hey, this is odds favorable momentum. Well, what does that mean to me? This is a green background. What does that mean to me? And what you're going to do is you're going to start identifying these advantages. And when you associate your rules with the words that you type, it reinforces that rule over and over and over again. And if you're taking a chart, and I'm going to show you for my Snagit users, if you're taking a chart and all you're doing is this and dropping a checklist on it, and all you're doing is going, yep, 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 without actually going through the rules, man, you're doing yourself a huge disservice. Because what you're doing is you're teaching yourself that if you ignore the rules, it's okay to break the rules. Trust me on this one. I've been doing a lot of research with you guys over the last month on this. Write your rules on your chart, guys. Type it out. Tell me what you see and why you're doing what you're doing, and it's going to reinforce those great rules. Once you have your chart annotated, once it's ready to present so that those questions are ready for me, click the copy button. And when you click that copy button, it's going to put that picture on your clipboard. Drop it into the chat box, guys. The first hour is dedicated to rules. The second hour is dedicated to everything that you post in this room. The third hour will continue that second hour where you get every question you have answered as long as you post it in the room. So you're in the room. You've got it. Guys, Capture Software also has a blue upload button. And when you click on it, it's actually going to take that picture and it's going to upload it to the screencast cloud. Copy pasting into the room your pictures is great, but we want this link. And if I copy it, this is where the magic happens, guys. This is where I can go to my spreadsheet and I can paste that right into the trade log, right? And I can answer all those questions. And now I have something to study tomorrow that's there forever. And then on the second page, these are my favorite looks. So every time my rules are met for an entry, guys, I take a picture and I put it into this green section. Every time you guys post a rules-based entry, well, not every time, but a lot of the time, I might steal it and put it into the spreadsheet as well. Because the idea is in the afternoon, I'm going to come back and I'm going to click on 20 of these links, 30 of these links, and I'm going to see exactly what it looks like for my rules to be met for a trade. And guys, you're creating recognition through repetition. First-year medical students do not get to perform surgery, right? They have to study, they have to get proficient, and then they get to reap the rewards of being that medical student. Same thing with architects, with engineers. Guys, you've got to go through the study process. You've got to learn what you're doing so that you can safely do what it is you need to do. I'm going to put my spreadsheet in the room right now, guys. I'm going to go ahead and jumpstart your learning process. And I'm going to give you over 250 examples of rules-based entries. If you're brand new, if you're serious, click on these tonight. Go through them. And if you have questions about them, feel free to ask. Once you've done all that, you can close this out and then the process starts again, guys. Make sure that you're good with that screencast. Make sure you're good with that capture software. And if you have a question about taking a picture, about annotating a chart, guys, I want you to go ahead and post it in the room. Say, Mark, hold on. I'm pulling mine up and I'm a little confused and I sure would appreciate some clarity. I got you, I promise. Which ones? The pictures? DR, I don't know what to call you, DR or Droskid, the pictures that I post in here, let me show you how to steal everything that I post. So every picture that I post, you can right click and you can save the image on your computer if you want. You can also, for example, where I posted in the spreadsheet, you can download it right onto your computer, or you can take this picture and you can left click on it and you can drag it over to your desktop and start a collection. So everything that I share in the room, you guys can get. They're not all in the education because sometimes we do things on the fly in the room, and I'll share things that are unique to that moment. So please get in the habit of stealing it. If I put a picture in the room and you don't already have a copy of it, guys, steal that picture, put it in your collection, drop it in your spreadsheet, save it in a folder, and sort it out later. So I'm going to post a lot of pictures. You post a lot of pictures, guys. I'm going to use my spreadsheet. You use your spreadsheet. Let's get to where we want to be together. We're going to spend our first hour and we're going to learn the Fibonacci rules for when it's okay to trade. We're going to learn the trigger line rules for when it's okay to trade. And we are going to keep it simple, guys. We're going to focus on a high probability trend trade. On a trade where every indicator on every chart agrees for the trade. You're going to have the strongest triggers. You're going to have nothing in the way. No terminations, no areas that might reverse the market. And guys, it is going to be a boatload of advantages. You're going to simulate. Each and every day, you're going to practice these rules. And let me say this right now, you're brand new. You're going to break the rules. You're going to make mistakes, guys. Even if you're not brand new, you're going to make mistakes and you're probably going to break rules. Hold yourself accountable. Take that picture, write your rules on it, write why you did what you did, hold yourself accountable. And then post that picture in the room so that I can help you in the process of holding you accountable. You don't want to practice the wrong trades, guys. That's setting yourself up for long-term failure. You want to practice the right trades. So if you're making mistakes, I don't know it if you're not posted in the room. We're going to simplify. Oh man, are we going to simplify? We're going to focus on the high probability trend trade. That's it for the first hour. That high probability trend trade is going to take you into a medium probability trade, and we're going to talk about all the rules for it. And guys, I'm going to hand you a trading plan before this first hour is over. I'm going to give you the rules, how to manage it, all these things, right? And then you're just going to practice. Before the next day, go back, use that market replay. Replay your days, fix your mistakes. Guys, understand the potential of following the rules through market replay because you can pause and make sure that everything is right. Take pictures of those trades from market replay, bring them back and share it, and repeat this process every day until you always take the correct trades. And guys, that's what we're going to do. And we're going to do this together. And we're going to go to the tutorial section and scroll down to the glossary of common terms. And we're going to talk about your path to success, guys. And it begins with a high probability trend trade. Joel, you're going to hold yourself accountable, but you're also going to forgive yourself for mistakes, right? Because mistakes happen in the learning process. It's important that they happen during the learning process. Guys, we're going to focus on the high probability trend trade. We're going to focus on a trade where each indicator on every chart agrees for the rules for the trade. This is when your triggers are the strongest, no termination conditions exist, and there are no trouble spots between your entry and your target. Guys, this is your first 30 days with Nexgen. This is the trade that typically wins 70 to 80% of the time. This is the trade that's going to bring you confidence through the memory of success. Hey, welcome to the room, Abinvest. This is the trade that most importantly, guys, is going to teach you to read your charts. This is going to make you a chart reader before it makes you a day trader. And when you're a chart reader, you're going to open up your workspace and you are going to recognize three things and you're going to recognize them fluently. You're going to understand where the market is likely to continue, and you will, in a very short time, be able to use that continuation point for an entry for a high probability trend trade. You're going to understand where the market is likely to go. Hit them straight, Paul. You got this. You know, I got in the 80s a couple times, and then I added another 10 strokes to it. Yeah, but I'm getting better every day. I'm trying. It's like trading. 2 steps forward, 1 step back in the beginning, right? Guys, you're going to understand where the market is likely to go. And when you do that, it's going to allow you to take these trades and to get the absolute most out of them. You're going to be able to use Fibonacci. You're going to be able to use momentum and recognize when that market has the opportunity to make it to the next area, and you're going to be able to capitalize on that. You're also going to understand where the market is likely to stop. And guys, likely to stop is what we call a termination condition. Likely to stop means that the trend may end. And this is going to be a huge waving red flag to you that says, all right, no more trades. No more trades because this market may bounce, it may turn around. We're just not sure. Let's sit on our hands and wait for everything to be perfect. Likely to stop is also the anchor for the highest probability trend trade, guys. When one of these termination conditions reverses the market and you catch that high probability trend trade that happens right after it, guys, that's the one that wins 70 to 80% of the time. That's the one that is a plan for success, creating confidence through success. And that's what we're going to focus on. We're going to focus on this best of the best. And guys, I want you to write it down on a piece of paper right in front of you. I want you to spend 20 trading days, right? Your first 30 days with Nexgen. I want you to focus on entries. I want you to focus on getting into the market at the correct spot, because every great entry creates a manageable trade. So when we go to that high probability trend trade, it's only 3 rules. Some of you are going to try and turn it into 5 rules or 7 rules or 20 rules, right? Some of you are going to say, but Mark, more information has got to be better, and it's not. Simplicity is going to get you to the promised land, guys. John Novak has a phrase. He said it to me the other day. He said, we have the golden goose, but so often we try to turn it into fried chicken, right? It's silly, but it's good. So 3 rules. That's it. These 3 rules are going to give you 3 advantages, guys. And the 3 advantages are the recipe for a trade. Simple creates less stress. It does. And we all get there eventually, right? Guys, a trade is nothing more than momentum, a clear path, and an entry area. And you're going to be able to gauge these 3 advantages on only 2 charts. Only 2 charts, right? But Mark, other people have 4 charts. Don't worry about other people. Simplicity. We're going to use a large chart. The large chart is like the general opinion of the market, right? It's going to define direction. It's going to define momentum, and it's going to define the areas that we look at. Rules 1 and 2 of 3 for a high probability trend trade take place on the large chart. Guys, before you ever even think about looking for an entry, you will have the advantage of momentum, and you will also have the advantage of a clear path. And when those are present, then you're going to turn your eyes to the smaller chart. And this is going to refine that broad stroke of a brush that the large chart is. It's going to take everything that's going on that large chart, and it's going to whittle it down to a window of opportunity where rule number 3 is going to give you your entry. And by embracing this refinement process, you're going to be able to reduce your risk, and you're going to be able to increase your profit potential. And I'm going to show you what it looks like on 2 charts, that refinement process. Your large chart is going to define direction. We're going to understand the overall trend of the market on that big chart. You're going to be able to determine and identify momentum on the large chart. You're going to be able to say to yourself, there's nothing in my way on the large chart. And what happens in 1 bar on that large chart, that 1 bar giving you all this great information, you're going to be able to refine it on the smaller chart. You're going to get 15 to 30 bars on a smaller, faster chart. And we're literally going to be able to pinpoint that area where the market is likely to continue so that we can reduce risk, so that you can increase your profit potential. So we're going to take that broad stroke of a brush and we're going to whittle it down, guys. We're going to let the large crowd tell us where we're going and how fast we're getting there. And we're going to let the small crowd, these silly group of people that want to fight trend, that want to fight momentum, they're going to push us right back to that best of the best area so we can get in and make some money. So let's go through this, guys. Everything that I talk about is from the tutorial section. And rule number 1 is your T3 trigger lines. And T3 trigger lines are going to be a part of everything that you do, guys. And there's 2 parts to them. There are your small trigger lines, which are the solid, faster moving average. And there are the large trigger lines. It is the dash, the wider, the bigger, the slower moving average. These two work together in a couple ways, guys. The first thing they're going to do is they're going to define trend. When the smalls break above the large, your background is going to paint green. That green background is going to let new users know that we're in an uptrend, that you should only be looking for rules to be met for high probability trend trades long, buying the market. When the background is red, the small triggers are broken below the large triggers. It paints it red. You know that we're in a downtrend, and we're only looking for rules to be met for high probability trend trade short to sell the market. Guys, and if you never fight the trend, you've already given yourself a huge advantage. Next, we're going to use those T3 trigger lines for rule number 1. And rule number 1 tells us that we have to have strong trigger lines. Strong trigger lines are something that you guys are going to be able to identify in the first 5 minutes after we talk about it. It's an easy process. It's an effortless process. When your small triggers cross up and above the large triggers, which are also crossed up, vertical in the direction of the trend in this uptrend, it's the space created between small and large that let me know that the odds are favorable for the market to continue up. And you're going to hear it in the classroom all day long, guys. Odds favorable momentum. Did you have odds favorable momentum? You're going to see it annotated on charts, OFM. And guys, this is the best of the best look. This is the precursor. This has to be happening for you to even look for a trade. In a downtrend, small's below the large are wide. They're angled in the direction of the trend. That space created between small and large, like scissors, open, prepared to cut. This lets you know that the odds are favorable for the market to continue in the direction of the trend. This is the absolute most favorable look for buying a pullback to Fibonacci support in an uptrend. And you see that refinement process, right? One bar is 15 to 30 on the small. Nexgen users get in at the bottom of this bar, right at the areas on the smaller, faster chart. In a downtrend, the most favorable look for selling resistance on a pullback, getting you where you want to be, taking advantage of that momentum. Guys, let rule number 1, super simple. Let it always guide the way. Let it lead. Because when the small triggers break back below the large, or into the large triggers, when we weaken the large triggers, that's what this is right here. Small's inside. Anything can happen up or down. And when anything happens up or down, you lose that advantage of momentum, guys. You lose that advantage of really not knowing whether it's going to go up or whether it's going to go down. So rule number 1 says odds favorable momentum. Rule number 1 is not going to happen all day, every day. You're going to see those anything can happen triggers. You're going to see that odds favorable momentum. We're going to look for our opportunities when the momentum is the absolute strongest, when we have the best advantage. And I'm going to drop this picture in the class because this one reminds you that the advantage isn't present from start to finish. Sometimes we have to sit on our hands. 90% of what we do during the day is waiting for these advantages to be present. Anything can happen. Look how the market reverses. Odds favorable, it continues. Anything can happen, it reverses. Odds favorable, continues down. And then we get indecision. Then we get large triggers down and small triggers up. The trend is up, but the triggers are down. This is a fight between buyers and sellers. This is a fight where these forces that control the market, these large crowds, are fighting one another for supremacy. Next-gen users, you don't ever have to get caught up in the middle of their fight. You can sit on the sidelines and let them duke it out and wait for one of them to win and one of them to produce odds favorable momentum once again. So odds favorable momentum, guys, that's the one to get it going. And let's see just how easy it is to recognize. This is a NASDAQ chart, guys, and the NASDAQ chart moves a lot. I'm going to take everything off this chart. I'm going to go to templates and I'm going to load it and I'm going to put nothing but trigger lines on it. And I want you to see how simple it is to recognize from that point where the smalls break away until they return. There's one of those potential entries. There's one of those tails. And if I scroll back just a little bit, once again, odds favorable momentum. There's one of those tails, and look how the market continues all the way down to anything can happen triggers when it pushes back up. New users, is everybody okay with this idea? There's that odds favorable momentum. We're going to look for our opportunities from the point of separation until they return. The triggers work their way inside, and look how the market drops. Triggers work their way inside, the market pushes up, odds favorable, and they go back down. And guys, we're going to do this every day. We're going to start with that odds favorable momentum, and there it is again, over and over. Even in a big move, it typically starts with a great opportunity. Anything can happen, triggers, guys. It just preceded another reversal in the market. We don't know if the reversal is forever, but at least we knew that the momentum was gone, so we could sit on our hands and we'll wait for that absolute best of the best. Guys, embrace the idea that momentum gets you where you want to be. Embrace the idea that momentum creates a definite advantage in the market. Once we have that momentum, we go to rule number 2, also on the large chart. Rule number 2 says that terminations are false, that there's nothing in the way, nothing that may reverse the market, right? Room to your profit targets. That's the advantage of a clear path. That's the advantage of having nothing in your way, right? Nothing between you and the promised land. And when we talk about termination conditions, it's just a Fibonacci-based indicator that may reverse the market. And it's going to be based on a comparison of those T3 trigger lines in an area. So once again, guys, here's a picture to share with you. If you're brand new, this is what you're looking at every time you open your charts. These are the areas that may reverse the market. It can be red Fibonacci resistance, blue Fibonacci support, right? Those Fibonacci measurements, the reason you guys are here with us in Nexgen. Yellow 1-to-1s. It can also be one of these divergence high lines. It's a magenta line, has some dashes on it, or a divergence low line. The cyan line. Guys, these divergence lines, divergence, let me define it real quick. Divergence means loss of momentum. But that's okay, because what I'm going to do is I'm going to show you which ones are important and which ones you ignore, right? We are very much in the moment traders, guys. We are very much using these lines, but we're using them in the moment to gauge what's happening right now to see if those advantages are present. So these are your lines, and if you look at the charts, in the moment, there's only a couple, right? If I go like this, there seem to be so many, but if I stay present, it's a little less overwhelming. So what we're going to do is we're going to take these areas and we're going to do a simple comparison. There's two things that have to happen to identify a termination condition, an area that may reverse the market. And the first thing that happens is price reaches the area, meaning these price bars come down and in this case reach Fibonacci support. When price reaches Fibonacci support, all you have to do is ask yourself, where are those trigger lines, right? Simple process. Price reaches support, where are the trigger lines? If they remain above support, you've reached a termination condition. You've reached an area that may reverse the market. You've reached an area that may create a bounce. And what this does for Nexgen users is it says, hey, no more trades into this area. It's either going to reverse the market, and then I'll look for trades the other direction, or both my small and my large triggers will break through as they did this area of support. Small and large get through. That area of support begins to behave as resistance. And guys, look what happens when the area breaks. Odds favorable momentum. Clear path, right? Because small and large are through. There's one of those tails pulling right back to it, taking us to that next Fibonacci area. You guys are going to learn how to enter the market right here. But first you have to make sure that there's nothing in the way. So when we talk about termination conditions, embrace the recipe. Price comes down, reaches support. In the moment, no trades. But you'll notice that the smalls break through, the large start to break through, guys. It's no longer price reaches and triggers remain above, but the market goes up anyway, and it creates one of those losses of momentum, one of those divergence lines. This is not a termination condition. This is just a loss of momentum that pushes the market up. It's when price reaches the area. That's when we run our comparison. Price comes back, it reaches this divergence low, and it creates what we call a pivot stop out. When the price trades below the divergence line and then back above, no more short trades. And a pivot stop out is a very powerful termination condition, and it may reverse the market. And it's more powerful still when it coincides with Fibonacci. So this picture, this is your reminder, guys, that 90% of what you're doing during the day is waiting for the advantages to be present. You may wait 3 minutes, you may wait 30 minutes. Price reaches resistance, absolutely no trigger lines go through. We're not trading into that area of resistance because it may create a bounce, it may make an untradeable situation. In this case, it trades all the way back to support, at which point the trigger lines remain above support. So I can't go long and I can't go short. So I'm kind of in this holding pattern, guys. Have you ever traded, those of you that have traded for a while, have you ever been caught in a consolidated market and you keep trying to get into that market and they keep stopping you out? That doesn't have to happen anymore because now you can identify these areas that are holding. You can identify when a market is trying to consolidate, and you can clearly say, in order to take a trade, I need these areas to break. So price pulls all the way back up to resistance as well as this divergence high, and now we get another one of those pivot stop outs. And this pivot stop out is right there with resistance, so it makes it a little bit stronger. And when this pivot stop out creates that reversal and you get that separation, there's one of those tails, that first move, that best of the best as you're headed into the high probability trend trade. Price reaches one-to-ones. Notice that I say price reaches an awful lot. Price reaches the area. The trigger lines remain above, therefore no more short trades. Thank goodness. We would have been stopped out. We would have taken a loss if we made the decision to trade into this area. This termination creates a full reversal of the market. Large triggers go from red to green, small triggers get above, and then from this reversal, small and large get above resistance, which gives us a clear path up. The smalls remain outside of the large, and there's one of those pullbacks, guys. There's your highest probability trend trade. That 70 to 80% winner that happens after a termination condition. So I'm going to share a couple more pictures with you, and these pictures are going to embrace the idea, the recipe. Price reaches an area, triggers remain below when we're looking for termination conditions at a high. Here's one of those pivots. There's a loss of momentum, but do you notice how price didn't reach the area? It just pivoted from the middle of nowhere and it lost momentum. Not a termination condition, but when price trades back to that divergence high, the trigger lines remain below. Now we have a termination condition. Now we have a visual that says sit on your hands, you don't have a clear path. If this termination condition creates a full reversal, we're going to call it a strong top. We're going to call this a good top, and this is the precursor for the highest probability trend trade. Price reaches resistance, the trigger lines remain below, even with odds favorable momentum. No more long trades into that red line because that red line may hold. It may reverse the market. Price reaches one-to-ones, Fibonacci resistance. The trigger lines remain below. Absolutely no more long trades because we have given away the advantage of a clear path. We have to wait for that best of the best look. When we're determining termination conditions at a low, guys, the recipe doesn't change. The first thing that has to happen each and every time is that price reaches the area. If price reaches the area and the trigger lines remain above, it's a termination condition, no more short trades. If that termination condition creates a full reversal, we call it a strong bottom. And that strong bottom is a precursor for your highest probability trend trade. Price reaches support, triggers don't break, no more short trades. It's like a safety net for you. Here's one of those pivots with a loss of momentum. It's not a termination condition, but when price comes back to that divergence low, trades back above it, triggers don't break. Now I have that pivot stop out of a divergence low. Now it's a termination condition. Now we're not trading into that area. So guys, those are your highs and lows, right? Those are your areas. Remember when I said you wouldn't have to get caught up in consolidation? Price reaches resistance, absolutely no trigger lines break through. No reason to go long. Price reaches support, absolutely no trigger lines break through. No reason to go short. No reason to go long. No reason to go short. Waiting for the breakout, guys. Waiting to break out of that range so that you can take advantage of odds favorable momentum in a clear path. Price reaches resistance. Look at the bounce that it creates. And then it ultimately continues up. But this bounce would be untradeable. It would take you right out of the market. Price goes from resistance all the way down to support. Termination condition reverses the market. Do you see how easy it can be with that simple recipe? Price reaches resistance, the triggers don't break. That's the beginning of your reversal. There's one of those tails with odds favorable momentum. All the way down, over and over, guys. So what you can do is you can start coming through and taking pictures, right? I'm going to start taking pictures of areas that may reverse the market. I'm going to scroll back over 10 days. And let's do it. What's it look like live? You ready? Let's make it big. The market's coming down, right? So Black Hippocrates, do you see how we worry about what's in our immediate, right? Price comes down. Whoops, and I overshot. I apologize. It reaches this divergence low. Absolutely no trigger lines break through. Guys, we're sitting on our hands for a minute. And then it comes down and it reaches support. And we're sitting on our hands, and even with that odds favorable momentum, we're not looking for that entry. And look how support creates a bounce, and look how this termination condition reverses the market and gives us odds favorable momentum, and there's one of those tails, and off it goes. Off to your kids' college fund. So you can go back and you can practice. You can recognize odds favorable momentum. You can recognize termination conditions, right? And then you can put it all together, and you're 2/3 of the way to a trade. 2/3 of the way now. Large chart is giving you those areas. Large chart is giving you that momentum. Let me get back to the recipe here. And I want to remind you guys, if you're brand new, feels like a lot to take in, feels like you're drinking from a fire hose. We're going to focus on momentum first, guys. That's the first thing you're going to do. Actually, first, you're going to recognize the trend. And this is going to take you 5 seconds, right? Everybody's good. Green is up, red is down. Easy. The second step, the second bite of this elephant, right? Odds favorable momentum, insisting on it, that advantage of momentum. And then you're going to practice with termination conditions. You're going to begin to recognize whether or not the area is likely to stop you, no triggers through, or if the path is clear, nothing in the way, no price, no areas reached. And then you'll go to entries, guys. And I'm going to give you this path because I want to remind you that we're going to crawl, and then we're going to walk, and then we're going to jog, and then we're going to run. And when we're running, guys, we're full steam, all the advantages. But there's one other termination condition that I want to talk about, guys, and this is a chart reading termination condition. This is something, sometimes price reverses, not from an area, with that clear path in a downtrend. Sometimes price has odds favorable momentum, hasn't reached an area, nothing in the way. And there's one more termination condition, and this is the only termination condition that I give any credit to on a small chart. And that's 3 divergences in the same price range. 3 losses of momentum in the same price range may terminate the trend. It may reverse it. It may make it push too far in the other direction that it's no longer tradable. But this is the only small chart termination condition that I'm looking for. 3 losses of momentum may terminate the trend. It becomes more powerful when that odds favorable momentum, those smalls outside of the large, turns into that anything can happen look. Visually, I can recognize that I'm losing momentum on that smaller, faster chart. And then if that third divergence is higher than previous from a low or lower than the previous from a high, it becomes even more powerful. It's one of those head and shoulders patterns. It means that price tried to push down and it couldn't even match the previous pivot, and it's losing momentum, and it becomes very powerful. So it's actually three different termination conditions, three on their own, whoops, three divergences in the same price range may terminate the trend. That three divergence termination becomes stronger with anything can happen triggers, becomes stronger still when those pivots don't line up. And you're going to see this look from a low or this look from a high when your large chart, your slower chart, is turning from the middle of nowhere. So guys, these are your termination conditions. Give me a Y in the room if you're with me. So far, we've gotten the advantage of momentum, right? Those strong trigger lines. We've got the advantage of a clear path. And now we just need to enter the market, right? Now we need to get that area where the market is most likely to continue. And now that area is going to come from your small chart. Safia, I don't see any rules on that chart. I'm just curious. It's a tiny little thumbnail. Did you? Okay, I couldn't see it from where I'm sitting. I believe you. So during the live market, when you have an uptrend, when the momentum is strong, when the path is clear, this is what your small chart's going to look like, guys. It should be screaming in the direction of the trend. Your small triggers should be outside of your large. So you have odds favorable momentum. You're confirming that momentum of the large chart. You're seeing it on the small chart. Your large triggers, which are these smooth, and your synthetic triggers, the step. Guys, these should be working together. These should be overlapping, one on top of the other, because when they are, that's what we call favorable large triggers. So favorable large triggers means that those large and synthetics are one on top of the other. They're working together. They're trending the same direction. They're vertical. They're strong in an uptrend. They're down vertical in a downtrend. I'm not sure. Paul may be able to help you. He sent me the same question yesterday, but I didn't have an answer for him, I'm afraid. When you have favorable large triggers, your window of opportunity is the smallest. Your risk is the least amount, guys. So I want you to embrace the idea that smalls and synthetics have to work together one on top of the other. Because rule number 3 says that we're going to use a limit order, meaning that we're going to wait for the market. And we're going to use that limit order to buy or sell a pullback, just a small retracement in price. And we're going to buy or sell that pullback at an area inside of those favorable large triggers, which means that fibs, mid bands, and yellow 1-to-1s, these become our bounce point. These are like a brick wall, and you're throwing a tennis ball at it, right? And we want the market to come down to the area, and we want it to head in the direction of the trend after it does. And that retracement, that little pullback, is going to begin with a reversal bar on your smaller, faster chart. After all of those green bars, there's going to be a reversal bar, and that reversal bar signals the beginning of the pushback. And if you remember that initial picture that we looked at, when we talked about the advantages, and I don't know why I keep closing this out, we talked about who's in control, right? The large chart defines the trend. It's green, it's up. The large chart defines the momentum. Odds favorable. The large chart defines that there's absolutely nothing in the way, and we're going to refine this large chart, and we're going to let those trend fighters, those momentum fighters, they're going to give us that push, and they're going to give us that push right back to the area where the market is most likely to continue. Begins with the reversal bar. We're going to create a window of opportunity. For a long trade, it's going to be from your highest point of support to your lowest point of support inside of favorable large triggers. For a short trade, it's going to be from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. Notice that I always say inside of favorable large triggers. I want you to write that on your chart when you annotate it. I'm entering at the area inside of favorable large triggers. Guys, I'm going to right click on my chart, And I'm going to activate a limit order at the very top of that window. Because of the momentum and the clear path on the large chart, I'm not willing to miss it. So I want to be at the top of that window. And one of two things are going to happen. Price is going to pull back and it's going to reach that top of the window. And I'm now going to be in a long trade, right? I'm going to be in a long position at 79.21 because my entry goes at the top of the window. I'm in this trade because I have the advantage of momentum, and because I have the advantage of a clear path, and because I now identified where the market is likely to continue, so I now have the advantage of an entry area. When I'm creating my window of opportunity, when you're creating your window of opportunity, visually you're looking from the top of the triggers to the bottom of the triggers, and the areas must fall within. For this long trade, the highest point of support is a midband, the lowest point of support are one-to-ones. This shaded area represents the area where the market is most likely to continue. This is where trades come from. We're in at the top because our large chart, our momentum defining chart, says that we're screaming in a direction with nothing in the way. But every time you take this trade, guys, you have to be prepared mentally to see a couple red numbers. It may push against you a little bit, and that's okay, and it's totally normal. We've created a window, not an exact to the tick. This is a trade that I take every time it sets up because this is a trade that typically wins 70 to 80% of the time. And anything that wins 70 to 80% of the time is obligated through mathematics to lose 20 to 30% of the time. It's a cost of doing business. That's all it is. 20 to 30% of the time, we're going to allow the market to be wrong. But when we allow that market to be wrong, we're still going to protect our equity. So you're going to put a stop right outside of that window of opportunity, right where the market shouldn't go. If it's not going to work, it should go beyond that window of opportunity, right? So we're going to be waiting there like a catcher. Boom, we got it. It stopped. We're out. We're going to lick our wounds, understand that it's a cost of doing business, understand that the advantages were in place, and we're just going to look for that next trade. But I'm never missing this trade when it sets up. Because 70 to 80% of the time, guys, this is my result. Make it to that profit target reach, right? When a reversal bar prints, I'm going to reduce my risk below that reversal bar. So I'm minimizing risk and I'm maximizing profit because I wait for the pullback. I'm waiting for advantages. And guys, this is your highest probability trend trade. This is what's going to get you focused on chart reading. This is what's going to give you the memory of success and the confidence that comes from it. We need to study for recognition. That's your goal in the first 20 days. Thank you, Jose. News in 2 minutes, guys. Your goal for the first 20 days, guys, is to be able to pinpoint this entry. Recognition and practice is going to make it easier to do that, guys. So you can study, and this picture is your study tool. When the rules are met on the large chart, circle those tails. If those tails line up with an area inside of favorable large triggers, you know that it's a rules met trade. So let's go back to the live market. Let's look for a good example. Those are split triggers. I'm going to look for one that fits the bill beautifully. And I'm going to take off everything. We're going to get rid of some noise on the charts, guys, for the sake of entries, okay? Just the trigger lines. Odds favorable. There's that tail. Your job is to go back. When rules 1 and 2 are met, circle the tail. And if that tail lines up with an area of support inside of favorable large triggers, it's a rules-based trade. And guys, you're going to be able to do this all day long. You're going to be able to go back for 10 days and circle a tail and scroll on your small chart. This one didn't make it back to an area of support inside of favorable large triggers, guys. This one isn't a rules-based trade. This is one that you're probably going to miss out on, and that's okay. Because for every trade that you miss, there's probably another opportunity right around the corner. Odds favorable. There's a short little tail. Let's see what it looked like. right back to that area of support just above the large triggers. So guys, the patterns are going to repeat themselves every day. And if you scroll back on your workspaces, scroll back on all the workspaces, circle a tail, area of resistance inside of favorable large triggers. New users, would you like to do a bar by bar, that scenario that gets you into that best of the best entry? We can practice one together. Do you guys want to see it? We'll go through the whole process from start to finish, starting on the large chart, on the small chart. Nobody wants to do it? That's cool. Makes it easy, I guess. Makes my job easy. You know what? I'm going to do it anyway. Thank you, Scotty. So let's start on the large chart, right? Because the large chart leads the way every time. The large chart has to say, I have odds favorable momentum. So new users, give me a Y in the room if you see it. Odds favorable momentum on the large chart. Small's below the large. This thing is booming to the downside. And then I have to ask myself, has price reached an area? In Black Hippocrates, this is where we can narrow our focus, right? We're not looking at all the lines. We're looking at the lines that the market has or has not reached in the moment. And right here, it hasn't reached a line, guys. There's no termination conditions. There's absolutely nothing in the way. Rakesh, it doesn't happen every second of every day. So if I go back and I study this, doesn't it make sense that it'll be easier for me to recognize when it happens real time when that market is moving? Recognition through repetition. This market's not moving, but in a slow, stopped picture, I can say, look at this. A termination condition creates a full reversal. A full reversal gives me odds favorable momentum. Odds favorable momentum hasn't reached an area. There's my pullback. There's my window of opportunity. And there's Alan making money all the way up. If you study this picture, it's going to be easier to recognize it in the moment. But if I see opportunities, I promise I'll point them out. So guys, rules 1 and 2 are met on the large chart. Everybody's comfortable with this, right? What an easy concept to get. Most of you will have this part down in the first couple days. So my small chart, I'm looking for an entry, right? And I'm waiting for a reversal bar. And there it is. There's my first reversal bar. And I want you guys to do this. Draw a box from the top of your triggers to the bottom of your triggers. Do I have any areas inside of favorable large triggers? Do I have a fib? Do I have a mid-band? Do I have yellow 1-to-1s? Guys, do you notice how there's not? Maybe not my trade yet, right? That's okay. I'm not activating a limit order because my rules aren't met. And the only thing that you will ever be in control of during the day is whether or not your rules are met. And that market starts to come up and then it heads back down. And this is where a lot of you are going, oh my gosh, it's going without me. This stinks. I'm so sad. What am I going to do? Let's see if that'll show up over here. And I'm going to see a lot of you jump in right here and you're going to say, I'm going because I have momentum and a clear path. And to hell with that area inside of favorable large triggers. And you jump in the market and you're like, whew, I'm going to get paid. And the market goes and you're like, man, what a great decision I just made. And it continues down. And then I get that next reversal bar, right? Now I get that best of the best. Now I get that advantage. And I take my window of opportunity once again from the top of the triggers to the bottom of the triggers. But now I have the advantage of resistance. Now I have something for that market to bounce off of. I didn't know if this was going up 20 bars or if it was going up 2 bars. I didn't have an area for it to go to, guys. I'm not jumping in. Now I've got these areas. They're inside of favorable large triggers. I've got the advantages here. I'm going to put a limit order just below that resistance. And now I'm going to sit on my hands. And that market comes up and it smacks right into my mid band. And this is my entry point, 4,650. And my initial stop is where? Outside of the window of opportunity, where that market shouldn't go, above those areas. And there's nothing for me to do at this point. I have the advantage of momentum. I have the advantage of a clear path. I have the advantage of having entered where the market is most likely to continue. And I'm sitting on my hands and I'm waiting for a reversal bar. And well, there it is. And I want you to see how we're able to reduce risk, guys, from outside of the window to 2 ticks above that reversal bar. Look at how tight, like a sniper, a rules-based sniper. And then that market just off to the races, right? Because of the momentum, because of the clear path. From 4,600, it doesn't blink until 92. That's 8 points. That's $400 profit in the S&P, 800 on a 2-lot, right? So, guys, this is your best of the best. Study these entries. Do them bar by bar. Practice them every day. Post pictures in the room when you take a picture of one of these trades and say, hey, Mark, here's my picture. Here's my rules written on it. I want to make sure that I'm reading it correctly. Guys, is everybody cool with that? I hope so, because this is how you get to where you want to be, guys. Simplicity. I'm going to give you a high probability trend trade checklist, guys. Every one of you. TJ, great question. I'll tell you. And we'll talk about that in just 1 second, right? So yeah, if I'm brand new, I'm using that simple. I'm doing 10 and 20. And I'll show you that. We'll go back to that same trade once I introduce you to this management, okay? But first, guys, take this. Trend trade checklist. These are the rules. These are all of the rules. And if you mark yes to every one of these, the likelihood is that you're going to win 70 to 80% of your trades. I've never had anybody follow this checklist to the T and never do worse than 70%. They've always done better. Most of them are 80 to 90. So there's your first gift. Your second gift. Remember I said I'll give you everything you need to succeed. Here's that same checklist, but I liberated pictures from the resource material showing you what it looks like when each of these rules is met. Guys, study it in the morning. Take a look at it. Remind yourself every day what it is you're looking for. And then I'm going to give you a trading plan, guys. And I'm going to tell you right now from experience, if you don't have a written plan, you don't have a plan. If you're flying by the seat of your pants, you're going to make different decisions every time your emotions tell you to make different decisions. So if you practice in the beginning of keeping it mechanical entries, 20 days of focusing on the best entries, you're going to be in a better position. So simple plan for consistency, guys. It starts with never fight the large chart direction or triggers. Never fight the trend. Never fight the momentum. And what you're going to find is that you're on the right side of things more often than not. You're going to define your entry using that checklist, right? Momentum, no terminations, area for entry, mark the liberator. I like it. And in order to enter the market, guys, you're checking yes. You're keeping it focused. Take pictures of your entries. Guys, I gave you my checklist or my spreadsheet. I gave you 260 pictures. I want you to go back and take a couple and put them into your plan. This is your plan, right? This is Gary's plan, Donovan's plan, Cedeno's plan. This is Johnny Rocket's plan, because I like to say Johnny Rocket at least once a day. This is D's plan. This is Lil Saigon's plan, guys. Don't do what other people are doing. Do what you're doing. Take care of you. When you enter that trade, and this goes to TJ's question, right? Guys, every great entry creates a management opportunity. Every great entry needs to be managed. You have to do something with that perfect entry, with that best of the best entry, with that rules-based entry. So for new users, a mechanical, methodical approach to management is easy because we're learning to read our charts in the first 30 days, but we still have to manage the trade, right? So we're going to keep our management just as mechanical as our entries. Your initial stop is going to go outside of the window of opportunity, like we just talked about, which means that if you get at a mid-band inside of favorable large triggers, your stop is outside of that window where the market shouldn't go. We're going to manage our risk before we manage our profits. At this point in the trade, there's two options. You're either going to get stopped out. It's a cost of doing business. The market was wrong. We're just going to say next, brush off, and go to the next trade. Or you're going to get one of those reversal bars. And if you get the reversal bar, you're going to reduce risk on that trade, right? Pragmatic, methodical, if then. No room for opinion, no room for hope. Just making it happen because this is what my plan says. So now my risk gets reduced a lot. And I'm in that situation once again where the only thing I have to do is roll 6 feet from my desk, put my hands in the air, and I'm either going to hit my first profit target of $100 or I'm going to get stopped out for a small loss because I'm managing my risk. I never trade on hope. I trade on advantages. If it hits my first profit target, I have $100 in the bank. The first contract is closed, the position is gone, the money's in my account. They can't take that from me. Dopamine is flowing, I feel good, I'm a winner, right? And I'm moving my stop to break even, and I'm saying, I've got money in the bank and I'm not willing to give any back. I'm break even. And new users, it's this little kick, that quick win, right? That confidence through the memory of success. I say that a lot. And now with absolutely nothing to risk, it's easier for you to hold on to that trade and let it either hit the next target or get stopped out break even. Absolutely no big. Tattoo that on your mouse trigger finger. I know a guy that can do that, Daryl. And guys, after that first contract's taken, whoops. If it reaches your second contract, that's a $300 trade. That's $300 in the account. That's $300 that they can't take from you. That's $300 of profit. And I want you to think just how significant $300 profit is. If you do that once a day, every day during the trading week, that's a $1,500 trading week. And guys, that trading week turns into a $6,000 month. And this is the part that kind of blows people's mind. A $6,000 month is a $72,000 year, and all of that stems from one day of making $300. And then when you begin to compound, right, your 2 lot turns into a 4 lot. Well, now you're making 144, right? And your 4 lot turns into a 6 lot, and you're up over $250,000. And you're doing it off of one trade, the absolute best and the best. So TJ, let's go back to that one that we just did. If this was my entry at 60, my profit targets are at 98. Before I ever even get back there, I'm already $100. And my second profit target is here at 96. And that market never even blinked on the way down, and that's $300. And guys, then you have a choice. You can say to yourself, well, I made my 300, I'm going to sit on my hands and I'm going to wait for the next best scenario, or I'm going to get to a point where I can gauge momentum and I can use areas and I can begin to hold on for bigger moves because of what my charts are telling me. So guys, this is your plan. Keep it simple. Keep it simple. Keep it simple. Focus on the best of the best. Litter this chat room with pictures. And let's get you to where you want to be. Let's get you to that best of the best entry. And that's all we're focusing on, is being able to get into the market when the advantages are present. And guys, here's support. And the trigger lines haven't broken. And I need them to break in order to look for that trade. In crude oil, flat triggers are not momentum. They have to be wide in the direction of the trend. Multiple losses of momentum on your small chart, 2 divergences. The trigger lines are flat. Guys, this is not a high probability trend trade scenario. Not yet. We're waiting for the best of the best. And then NASDAQ, same thing. Just waiting for the best of the best, waiting for that market to give us exactly what we need to get exactly where we want to be. All right, so I'm going to take a minute, guys. I have used up all of my wind in the first hour. So I'm going to take a break. I'm going to take 5 minutes. I'm going to reload my water. I'm going to stretch my legs. I'm going to breathe deep. I'm going to encourage you to do the exact same, guys. It's okay to step away from your monitor every now and then. If you have a question about anything about the high probability trend trade, I want you to post it in the room. We'll come back. We'll address those first. And then I'm going to start clicking on the charts that you guys have posted. Guys, when I click on your charts, I want to tell you something for the new users. I am warm and fuzzy, and I am all about celebrating wins. I'm all about recognizing advantages. I'm going to high five you. I'm going to praise you. I'm going to lift you up. But the flip side of that is if you make a mistake, I have to point it out, right? If there's something that it seems like you could do better, I'm going to let you know. And some of you are you're going to get your feelings hurt. You're going to be like, "Oh my gosh, I can't believe he just told me I broke a rule." Well, you did. And my goal is that you never break a rule again. The same way when your kid touches a hot stove, you're like, "Hey, don't do that," right? And they're like, Dad yelled at me," but he didn't. Dad just wants to keep you safe. That's what we're going to do, guys. That's our focus. I will be back in about 5 minutes, and that's it. And Scotty, it's hard. Um, when I first started with the software, and guys, this is for you new users, all the old users know this. I was a colossal pain in the ass for my brother because my brother told me, and guys, I'm at this point, I'm recovering from my second spine fusion. I'm out of a career. I'm looking for a new one. And my brother told me, my brother who wrote the software, who created the educational material, who's been doing this for 27 freaking years. He goes, "Mark, all I need you to do is post your trades in class. I want you to write your rules down and take pictures of them and use that spreadsheet so you know what you're looking for." And I fought him tooth and nail, and I didn't do any of those things. And guys, I spun my wheels for 6 months, and I lost a lot of money in that 6 months because I was so concerned about being right rather than going through the process. I got my butt kicked daily, and I had absolutely no idea why, because I wouldn't post in the room. Because I posted in the room one time and I was wrong, and he told me I was wrong, and I'm not going to lie, guys, it hurt my feelings. I'm a sensitive kind of guy, and it hurt my feelings. And I just stopped posting, and it killed me. It killed my progress. So I'm trying to help you guys avoid. I'll be as nice as I can, but if you repeat mistakes, I'm going to point out, hey, this is your thing. This is your pattern. Let's work on it. Yesterday, we had a pattern that it was rule number 3, waiting for that best of the best entry. For a lot of people, it's that pattern. But once we work through it together, and you start recognizing those best entries, guys, you start taking better trades, you start taking smaller losses, you start taking bigger winners, right? So everything we do, post those pictures. Odds favorable. Everything says down. 1, 2, 3 divergence. Son of a gun. Guys, watch the NASDAQ for me while I go stretch my legs. I'll be back in a minute. All right, y'all, here we go. Second hour. Well, I guess we got a little far into it. For those of you that are new, in order for me to see the old charts, I have to scroll up like this. So I'm going to scroll to the top and I'm going to start looking at some charts. I'm going to talk about what I see. If you have a question, I have to scroll back and forth. So I may miss your question for a minute. If I do miss your question altogether, guys, do me a favor. Let me know. Go, hey, Mark, you missed a question at 8:74 or 8:15, whatever. And then what we'll do is I'll go back and I'll make sure that we get it. So one of the things that I do, guys, is I recognize patterns. And I recognize patterns in people. And sometimes it annoys people when I recognize patterns in them. And I don't forget a lot. So if I point out your patterns, guys, Gary, let's take a look at it. We have smalls below the large are wide, they're angled in the direction of the trend. Notice that he's using a checklist, right? Good top, not quite. It's a 50-50. The trigger lines got through. Terminations are 50-50, right? Smalls are through, large are not. No divergence. You chose to break your rule. Never got confirmation. So guys, one of the ways I'm going to hold you accountable is that if you're going to print your rules on your chart and then you're going to break them, I got to point out, hey, you broke your own rules here, right? Didn't trade from an area inside of favorable large triggers. Didn't have a clear path. Didn't get confirmation, right? So guys, I'm going to do this. I'm going to come through and I'm going to look at your charts, and maybe it's going to bug you, maybe it's going to not. And then I'm also going to praise you. This is absolutely perfect, right? Gary, there's that termination that creates a full reversal, no triggers through. There's that odds favorable momentum, and per your checklist, there's that no divergence on a pullback to an area inside of favorable large triggers, and there's that easy trade. There's that easy win. Guys, one of the biggest problems, hi TJ, I just saw that, I'll get it. Guys, one of the biggest challenges people have is trading into areas that haven't broken. And I'm going to talk about a medium probability trade real quick, and then we'll get back to it. So brand new users, keep it simple, right? Keep it simple, keep it focused. If the triggers reach the area or the price reaches the area, the triggers haven't broken, no trades. Sit on your hands. If small and large break through the area, they haven't reached another area, nothing in the way, you have a clear path, let's look for it, right? There's the third scenario, guys, and your ability to read charts. Your ability to understand those concepts that come out of a high probability trend trade are going to open doors for you. It's going to increase the size of your trading plan. It's going to increase your recognition. And while this is a wonderful thing, it's imperative that every time you expand, your plan expands with you, right? And you have a very decisive reason for what you're doing. It's going to take you to what we call a medium probability trade, guys. And a medium probability trade is when most of your indicators line up for a trade, however a small issue exists. So in order to take a medium probability trade, one of the most important things that you have to be able to do is understand, let me go back. You have to understand the advantages in place, right? You have to understand what it looks like to have odds favorable momentum. You need to understand what a clear path is, right? Learning to read those charts, understanding your entry area. So you're going to be able to take this medium probability trade. Your ability to read your charts is going to identify the issue. Your issue may be weaker triggers, so you forfeit momentum. Don't forfeit a clear path. Don't forfeit an entry area. It may be that you don't have a clear path. Don't forfeit momentum, right? Embrace two of the three always. Let it be one issue. And when you execute these, you're going to have to manage them assertively, guys. You're going to have to use that small chart and those losses of momentum to help you manage them assertively. Your chart reading is going to identify trouble spots. You're going to be able to get to a zero loss level as quick as possible on these medium probability trades. And your first medium probability trade, 99% of you, is going to be what we call a 50-50 trade. And a 50-50 trade has nothing to do with your odds of success. It has nothing to do with a win percentage. The only thing 50-50 refers to is 50% of your trigger lines have made it through the area that you're anticipating breaking. 50% have not. It's imperative that you have odds favorable momentum, that you have those strong trigger lines, because strong trigger lines break things. And when strong trigger lines break things, the market continues. So 50% of your triggers through, 50% are not. That area, that red Fibonacci, has the potential to break. It hasn't broken yet. There's not a clear path. Is everybody comfortable with this idea? No triggers through, no trade. Both triggers through, clear path. Smalls through with odds favorable momentum. This area has the potential to break. So guys, this 50-50 trade, when you add it to your plan, and I've put it into the trading plan, it's a different style trade. It requires a different checklist. I've given this to you in that simple trading plan already. And the simple trading plan is designed to keep you on the right side of things more often than not. You have to have strong triggers on both charts. Absolutely no divergence on your small chart. You want it to be coming from one of those termination conditions that create a full reversal. And if all of that is true, you're going to enter at the area. But if that divergence prints, no trade. And guys, notice that it says no divergence, and then it repeats. If there's divergence, no trade. In management, still using the window, still using 2 ticks. And then for the third time for brand new users, if divergence prints, exit the trade. 3 times you see this reference to divergence. This is your beginning as you take these medium probability trades to increase the likelihood of success. Your first contract at the trouble spot, keep it quick, let it be a base hit. So Gary gave us the absolute perfect example of how to take a 50-50 trade. And he has a termination condition that creates a full reversal. And he has odds favorable momentum, and his small triggers have broken through the areas, but his large triggers are lagging a little bit. He has 0 divergence, he has strong triggers, and he has a small window of opportunity. This is textbook entry for a 50-50. This is a rules-based trade. This is that medium probability trade, giving it every chance to be a winner, more so than if divergence are present, more so than if it's not coming from a strong top or a strong bottom. Gary, this is absolutely beautiful example. And now we'll go on to the next ones. Quite a few in here. So guys, we're going to point things out. Large chart says 50-50. The smalls are through, the large are not. There's that divergence. When divergence prints, the trade is lost, right? Taking away that advantage. And if your checklist says, if no divergence, enter the trade, Gary, you very conveniently deleted the bottom of your checklist where it says that you must have a market flow signal to enter the trade. Guys, it's okay. You're going to break rules sometimes. But when you do, I'm going to remind you that you broke your rules. And then this short is right into a termination condition. The small triggers haven't broken. The large triggers haven't broken. There's no areas inside of favorable large triggers. 2 broken rules creating challenges. So guys, I'm going to help you as much as I can. Follow your rules. I'm going to help you as much as I can, but ultimately it's up to you. Not yet a 50-50 look. Smalls haven't broken through, right? Great recognition. Just a picture of what's happening. What does that mean to you? Waiting for the termination to clear. What's that mean for your trading plan? Ask yourself. And I asked myself, and my brother and I did this the other day, and it was kind of funny. Pivot stop out pushed the market up. Pivot stop out may push it down. I'm not waiting for a termination to clear, right? I'm waiting for everything to roll. And, well, I guess I am waiting for a termination to clear. You put the arrow down here, defining that area. I like that. This one has to clear, or this one has to clear, and he's going to stay out of that middle. Beautiful job, Gary. Strong work this morning. Great chart reading. Focus on your rules every time. Safia, termination creates a full reversal. Full reversal gives you odds favorable momentum. This is one of those 50-50 trades again. And here's that divergence. And notice that there's not an entry. And the market dances a little bit on this area that may break. Safia waits for her trigger lines to roll down, not fighting it on the NASDAQ. Takes it at the mid-band stop, keeps her safe, makes money. Safia, that is great patience. And you NASDAQ traders, fighting small triggers is rarely advantageous. And then Joel, I really like this picture, and I hope you took it the way it was intended. Large chart leads the way, right? I'm going to do a couple things, Joel, because I know what a great chart reader you are. I'm going to pick this one apart just a little bit. And Joel didn't take a trade. Joel's in the middle of analysis, right? And he's calling this the pre-trade look. This is where I'm looking to get into the market. This is what he's looking for, right? Is the market... Notice that the checklist is empty. But if it weren't empty, we're directly into a termination condition. So what I notice on this one is that with the termination, with the full reversal, with the small triggers, this is a termination condition as well. And I'm a big fan. Rather than looking for the entry when the rules aren't met, keep your focus on that large chart. And if they're not met yet, you can say if then, but for a lot of people, myself included, if I form the opinion that this is where I'm going short, what I'm going to do is I'm going to ignore these termination conditions because I've already made the decision that this is where my entry is coming from. Does that make sense, Joel? Is anyone else guilty of that? You get this idea, man, I can't wait for this trade to happen, and you get so focused on this chart that you forget to let the large chart lead the way. So maybe get in the habit where you just sort of... You sit on your hands, you wait for it. You're like, all right, my large chart says go. Now I'll turn my attention to the small chart. Now I'll focus on that entry spot because the rules are met on the large chart. And guys, these are little things that you are making me better at recognizing when you post these pictures, because these are patterns that not only happen with, that one picture from Joel, but these are patterns that come to be from really everybody. Oh, Ron's just picking on me. I'm like, where's your chart? That's Ron just being a jerk. 82, mostly sunny. Guys, I'm already up to 73 here. I'm getting closer and closer to 107, but Ron, I'm not going to lie, I have weather envy where you're at quite a bit. All right, scrolling through. We had a little lull in the pictures there, so let me get to the next set real quick, guys. If you're brand new in this room, if you're one of my new users, guys, this is what we do every day. We talk about the rules, right? It's definitely a community. Everybody's working together for everybody's success, supporting one another. We're looking at these trades and we're learning from one another. We're learning from what each other puts in the room, from what each other asks on questions. Jose, it's a great top, isn't it? Beautiful termination, creates a full reversal. It's a 50-50 trade. There is no divergence. And then Jose, here's your pattern. Are you with me, Jose Trades? I heard it's hot down there. Do you see it again? Pivot stop out on your 21. Man, yeah, that's the one for you. So, Jose, that's your pattern, brother. Don't trade into those. They're powerful. But what was happening here, guys, and let's go to the ES and let me show you exactly what was going on here, because this is a great, wow, they are killing the NASDAQ. I'm going to show you what was happening before Jose's trade. And Jose, I think this is going to help you a lot. And not only Jose, but really everybody. Remember when I said that Fibonacci is going to help you recognize these consolidation areas, right? Termination to a termination to a termination to a termination, right? Boom, 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 boom. Fibonacci identifying when that market is range bound. Fibonacci and termination conditions keeping you safe from trading into these areas. So Jose, I'm going to say two things about your trade. The first thing is I love the setup. Your setup was rock star picture perfect. And I really don't think that you could have taken your entry any better. On a 50-50 trade with no divergence, with strong triggers, with this going on, this is great. And Jose, one of two things happens on these trades when the market has been consolidating. This either runs forever, right? It's like the sellers finally win and boom, there it goes, off to the races. Or that area with the potential to break that's been holding all morning, the sellers try and the buyers let them get a little bit further than usual. And then they take over. And where was your picture? And then they just fight back with everything. They said, nope, we're not ready to give up the fight yet. And this is a perfect entry on a 50-50 trade that says, hey, if this one goes, it's going big. If it doesn't go, that's cool. I'll take my small loss. Maybe right outside of that window of opportunity, not leaving so much on there, right? And then, Jose, sometimes you can use it as a tiebreaker. The same way if it's not perfect on the large chart on the 13.2, and guys, this is trickle down. You know how we want it to be perfect on the 5.1, right? It's not perfect on the 13.2. Let it be perfect on the 5.1, exactly like you did. Well, Jose, you've pulled in another chart. So if it's not perfect on the 21, doesn't it stand to reason that it should be perfect on the 13.2? See how that works? And I think that little thought process, guys, what we teach works on every time frame. What we teach works on every market. And I keep it focused on two charts because on two charts, this is absolutely beautiful, right? It's a not perfect trade. It's a medium probability trade with a perfect entry. And if one day you decide to add higher time frames, it's going to go the same direction. That higher time frame, if it's not perfect, well, then the next below it needs to be. And you can use any time frame, guys. On NASDAQ, we're using higher time frames than the S&P because the NASDAQ moves faster. It slows it down. So Jose, great look on two charts. But if this one's not perfect and you have the advantage of that 21, man, watch that pivot stop out, especially after a range. Great picture. Thank you for sharing that. That's a good lesson. All right, Paul, let's see what you did. He's probably out playing golf right now. I think Paul's just showing us a range-bound market, right? He's saying, man, it's going up, it's going down. Psh, I'm not doing it. No, he didn't. He took a long. Nope, he took the short. Sorry. Man, that took me a second, didn't it? Exact same trade you took, Jose. Exact same rules, exact same advantages, everything in place. Perfect rules-based setup. It either runs or it doesn't, right? It's either a huge winner or it's a fast loser, and that was the fast loser. Joel just pointing out some great stuff, right? Termination, everything's going up, everything is strong. Look at how many times this market pulled back to support inside of favorable large triggers. Great picture, Joel. A lot of advantages in the market, even if you don't catch all of them. A lot of advantages in the market. All right, Safia. All right, this is a part of the day where I have to shake my fist at you, Safia. Let's go through it. This is odds favorable momentum, right? Small's outside of the large, separation. Everything is the absolute best of the best. And if we go back to our pictures, I'm going to go back to it real quick. You have your tissues? Good. Safia, this is odds favorable momentum, right? What is this? Anything can happen when those small triggers return inside? That's our best of the best. This is the, oh my gosh, we're losing momentum, right? So, truth in advertising. Here we go. So let's look at it. Do we have odds favorable momentum as you're taking that trade? And this is okay, guys, because after the trade, it's important to go back and review, and this is why we do it. So odds favorable momentum, I'm going to have to say no. That's not your best trigger look. This is your best trigger look. So rule number one, maybe fudged it a little bit, but that's okay. That's not a deal breaker, is it? So let's go to rule number two. Weak triggers, the smalls have just started to break, right? But they're inside of the large. So I don't have a clear path, nor do I have odds favorable momentum. You've already kind of let go of the first two advantages. Do you see it in hindsight when you're breathing deep and relaxing? And then Safia, did you get in at the area inside of favorable large triggers? Not so much. You're already below all of those things that potentially create an advantage. You forfeited momentum, you forfeited a clear path, and you also forfeited an area inside. It could have been a gold leaf midband, right? It could have been made out of diamonds, but it's not inside of favorable large triggers, is it? So if we go to that recipe, whoops, where did that recipe go? If we go to that recipe of momentum, if we go to that recipe of the clear path, if we go to that recipe of an entry area inside of favorable large triggers, then it creates so many advantages. And when those start to go away and you start playing the almost game, right? Nice management. The fact that you were able to take quick profits. And then Safia, this is the one where you just kind of have to be patient. You got to say, maybe it's not mine. So what you're referring to, Ziba, in one of the videos, let me go to the define. Broke your rules, break even. There you go. Perfect. But what a great lesson, isn't it? Because in the moment, all you're thinking is, man, I'm going to take this long and it's going to be amazing. And then when you slow down, you review the chart, you're like, all right, the adrenaline's gone. Let's think about it. And I think that you managed it beautifully. And I think that's the key, guys. As you learn to read your charts, you're going to kind of step outside of the super safe box, and you're going to be able to manage them because you're going to understand how to read your charts. And that's exactly what Safia showed you guys there. All right, Ziba. So what you're referring to, let me go back to it. Odds favorable momentum only has one look. Small's outside of large, separation between the two. This is the only way I am ever going to accept the idea that there's odds favorable momentum. What you're referring to is a strong trending market, a market that has sent 30 bars in the same direction or has broken through 3 areas of resistance or support, and those small triggers are grinding right on top of the large to where you can see those. And this is what John's talking about. This is a strong trending market. And when you have a strong trending market, this look right here can take the place of odds favorable momentum. It's not odds favorable momentum, but it's a recognition that the market is absolutely railing in one direction. And this would be one of those instances. So more than 30 bars, more than 3 broken, right? And here's one of those tails with that look. Do you notice that there's a clear path? That's one of the keys, clear path. So if I go back and I look at the circle, I'm still not inside, right? And I'm still multiple divergences. There's still not a trade. But if you have this look and things line up, well, then it may create an opportunity. So what you're recognizing with that look is a strong trending market, and sometimes the other rules will be met with this look, and it works out. Does that help a little bit? So in Sophia's, it is a strong trending market, but the path isn't really clear, right? And the areas aren't inside. And that's kind of where the challenges come in, I think. Especially that close, and it came right up and it reached that area of resistance and it grinded up a little bit, but then that was it. So it's okay. It's a great picture and it's a great lesson. And guys, this is one of the great things about what this classroom does, is it creates all of these opportunities to look at not only what what someone else is doing, but you get to listen in. Here's their private session. That was Sophia's private session, and it turned into Ziva's private session on a strong trending market. Paul says, smalls are outside, the path is clear, one divergence doesn't scare them. I'm going to get in at the area of support inside of favorable large triggers. I'm going to take quick profits, and every chart agrees that this market may go up more. And look how he's using Fibonacci for targets. Paul, I hope that one went straight to the target for you. That is a great looking trade. Nicely done. And I have lost my place. Do you guys see it? The large cleared, the small cleared, the path is clear. There's not that huge separation between the two, but there's strong triggers on the small chart. And there's a beautiful entry with controlled risk right inside of those favorable large triggers. It's a nice trade. And then Sophia, you took this one. Jose, you said that you took it as well. Ziba, so here's what happens, guys, is in the beginning you don't know anything and you focus on the rules and you focus on the looks and you're like, I want odds favorable, I want a clear path, and I want an entry, right? And that's it. And then the more that you learn to read your indicators, the more likely you are to stray away from those rules, the more likely you are to embrace your own brilliance. Guys, I'm reading these charts, amazing. I'm going to start doing what my read says rather than what my rules say. Does that sound familiar for anybody in this room? That's not your case? Okay, so what's confusing you? Because that is such a broad statement, Ziba, that it's difficult for me to understand. Does it become difficult for you to recognize odds favorable momentum or entries? It does get better, but focusing on what's important because you get too much information. So, Ziba, you can only... There's always some kind of hurdles to get entry. There's not. So, Rakesh, when people tell me that I can't find an entry, it's because they think that every movement is theirs typically, and I'm not saying that this is yours. And Ziba, you're getting too much info and you're processing too much stuff. Because you're focusing on everything that you see, right? You're not focusing. See, but let me show you exactly. So I can't control that. I can't fix that with you, right? The only thing I can fix with you is let's do this. Did we have odds favorable momentum? That's the only thing I'm worried about. Do I have no termination conditions? That's the only thing that I'm worried about. I don't care about anything other than odds favorable and no terminations. And do I have an area inside of favorable large triggers? And if I do, I take the trade. The large chart is the easy one, isn't it, Rakesh? But what if you let the large chart lead the way every time? What if you never even looked at your small chart until the large chart said it was time to look for a trade? Wouldn't that remove a lot of noise for you? And I think that that's the point that I'm trying to make, guys, is allow it to be simple. Allow it to be nothing more than a couple advantages on the large chart, and those large chart advantages turn into small chart opportunities. And my NASDAQ users, look at the large triggers here. Which one? The charts that we're looking at? And Debbie nailed it. Waiting's the biggest part, guys. So what does your large chart say? Are you ready, Rakesh? Oh, this is going to bug you, and I'm going to apologize in advance when it does. That's a termination condition, right? Price reaches a divergence low and the trigger lines don't break through. Are you comfortable with that idea? Rakesh, that resistance with no trigger lines through it is a termination condition. Your large triggers are down, your small triggers are up. We don't have odds favorable momentum, nor do we have a clear path. The hardest thing you're ever going to do, Rakesh, is absolutely nothing. You're trying to go long directly into resistance. You're trying to go long when your large and your synthetic are down. You're trying to go long when your large triggers are down, right? I'm not sure what gave you the decision that it was time to go long. The hardest thing you'll ever do is when your rules aren't met, do absolutely nothing, right? So Rakesh, we focus on advantages. And if I take away your small chart and I only look at your large chart, there is absolutely no reason, no rules-based indication that you have an advantage one way or the other. Does that make sense? Zeba, does that make sense? If I let the large chart lead the way, if I let the large chart, and I insist on odds favorable momentum, and I insist on a clear path, guys, who cares what the small chart says? And Rakesh, you're right. Look at all those red and blue lines. And what are they telling you? They're telling you, Rakesh, be patient. Let's see if this area clears. Let's see if this area clears. And then the hardest thing that you're ever going to do is sit on your hands and wait for one of those areas to clear so that you can have those advantages. And guys, this is why those of you that think that there's not enough entries, there's not enough rules breaking entries for you. Every time you see the market move, people believe that that's their money. And it's not. Flat triggers are not favorable large triggers, right? There's no advantage there. They're flat and lifeless. But if you come back here, when everything is up and everything is strong and it pulls right back to those triggers right inside that, guys, it goes up for 20 to 34, 14, $280 worth of profit on one contract. So the idea is that you get so stinking good at recognizing the best of the best that you stop trying to make something out of everything that isn't makeable. And that's where the challenges come in, guys. You confuse yourself when you break away from simplicity. You confuse yourself when you're not looking for the advantages, when you're looking for the trades. True story. Great conversation. Great conversations, guys. And it's so important that you lay those out there, that you talk about those. So, all right, we didn't talk about Sophia's yet. All right, you ready? Sophia and Jose, because I know you guys both took the same trade, right? Let's do a lesson on how fibs come to be, okay? And I think that this is going to help you guys a lot making decisions. So, fibs, you open your software, guys, and it goes back historically. And it measures every swing in the market. And it projects forward and creates synthetic time frames, and it creates thousands upon thousands of calculations. Each and every one of those Fibonacci calculations is weighed out, it's sorted, it's looking for areas of concentration. And it's this process that creates these lines, okay? So each one of these red lines is coming from maybe 1,000 that are in an area. So you were one tick off of this line, both of you, right? You were one tick off of that concentration area. You did have odds favorable momentum. I agree, I like it. But guys, you were 50-50 on this fib. You were 50-50 on this fib. You were 50-50 on this fib. You had 1, 2, 3 fibs that had to break before you made it 8 ticks to that line that hadn't been touched yet. Does that make sense? That was 3 areas that hadn't broken, yeah, and that was over 10 points in those 3 areas that these trigger lines, oh, and a divergence high. So guys, 50-50 trades are great, right? 50-50 trades can be amazing. 50-50 trades can be outstanding trades, and this is why taking the best trades first is so important. Let me show you a great looking 50-50. Nothing beyond, right? Crazy odds favorable momentum. Guys, that is your look. Large triggers trying to break through like one area. That's your best of the best. And oddly enough, when I put in that simple plan, when we talked about 50-50s, I put in there one area not broken. Why? Because we're taking away a clear path on one area. How hard is it to take away a clear path on 6 areas, 5 areas, right? So maybe that'll help out a little bit. If you're 50-50 on this fib, but you're a fraction of an inch off of that next fib, sit on your hands. And the entry's great, right? Weak triggers over here. Huge window of opportunity. Does it make sense after the fact, guys? And I like to do this, and I think that reviewing your charts is so important. Because when that emotional element of wins and losses is out of the equation, it's easier to go back with a set of eyes and kind of weigh it out once again, to talk it through, to see where you're at. And then that was that one that Paul and Jose both took, right? That 50-50, no divergence. It was just a consolidating market. M, good morning. Let's see what you did, my friend. Small triggers are down, but the large triggers remain above, but 3 divergences and no divergence here. You said, I'm going to take a shot with the momentum, and that shot worked out. This is nice execution. And great job not being greedy. You tried to grab that little inside. Not a high probability trend trade, but an awesome chart read. Nice job. Gary, there's that 50-50, multiple divergences, and Gary says, nope, my rules say don't do it. I'm not going to do it. I love it. All right, Zeba. Termination creates a full reversal. Full reversal gives odds favorable. It's a 50-50, and that 50-50 has 1 divergence. You take the perfect entry, you're able to get paid on the first target. And then those small triggers coming up strong against you creates a challenge. And then Ziba, one of the other challenges with this trade, and I want you guys to see this as well. And this goes back to the odds favorable. And Ziba, this is a beautiful job. This goes back to that window of opportunity. This is the bottom of your window, right? Area inside of those large triggers. There's the top of your window all the way up there, because I have resistance inside of these synthetics all the way up here. So it creates a huge window, and that's okay. You get in, and your small triggers are way down here, and notice that it pulls all the way back. Jose, this is for you too, NASDAQ traders. It pulls all the way back to those small triggers, and then it starts to come back up, and those small triggers are against it. And this is that you just got to wait for a bigger push moment. Perfect entry. Great management, reasonable stop loss, right? But that huge window of opportunity creates a little bit of challenge, and then these small triggers coming up against it after your first profit gives you an opportunity to manage a little more assertively, I think. Does that make sense? Entries are the first part of the puzzle, and then management on the second, right? Nice job, Ziba. Man, it's already after 11. This day's flying. All right, Gary, let's see what you did. And then TJ, brace yourself. We got yours coming up. Termination. Price reaches a divergence low. No trigger lines break through. Gary says no trade for me. Rakesh. All right, so Rakesh, you said, so it looks like all the conditions are met, right? Can't figure it out. And I think, Rakesh, and this is just a hunch, but if you write your rules on the chart, if you just take a time, instead of saying that the rules are met, why don't you write what the rules are, right? Do I have strong triggers? And Rakesh, if you tell me, absolutely, Mark, I have strong triggers, then we're going to go back and we're going to do a lesson on strong triggers, because you can't have odds favorable momentum. You can't have that best trigger look if your small and your large are going opposite directions, right? It's not an advantage of momentum. That's your look. So you could go back and you can say, this may have been one of the challenges with my trade, as I didn't have the advantage of momentum. And then we pull the picture back up. And I'll have to ask myself, did I have a termination condition, right? Whoops. Did I have a termination condition? What does that mean? If we're going short, do I have a clear path? Well, price reached 1-to-1s and all the trigger lines have remained above. So what I can say is I've reached a term, no clear path, right? And then under strong triggers, large up, small down, no. Guys, this is what annotation does for you. And then finally, you can take that third rule. Did I have a pullback to an area inside of favorable large triggers? And now we can answer this one as well, because I don't have favorable large triggers. I can't because they don't even agree, right? And my entry isn't in an area, it's jumping in at the bottom. So if I go through this chart, and you know what? Rakesh left the classroom. So guys, nope, there he is. I see him. I was like, don't leave, Rakesh. I got you here. Guys, this is a pain in the first week because you want so desperately to be right. I did. And I'm telling you, if you write your rules on the chart, if you embrace the idea that this simple checklist is going to keep you focused on the best of the best, right? This simple checklist is going to help you recognize these advantages and take these trades. So Rakesh, when you say, and this is, I love these pictures, and I'm very appreciative of these pictures. So it looks like the conditions are met. I can't figure out my own why reverse the bar, right? So Rakesh, now we can go through and you can say, well, you didn't have the advantage of momentum in place, nor did you have a clear path to the downside. What you did have was a downtrend, and I know that you acknowledged that. You're like, okay, I do have a downtrend, and I do have a downtrend here, so I'm thinking shorts, right? And then Rakesh, yesterday we talked about this one quite a few times too. Jumping in at the bottom of a move, not waiting for that pullback to an area inside of favorable large triggers, it got you 2 or 3 times yesterday and it got you again today. So now what we're doing is we're beginning to identify patterns. We're starting to say that, well, that's your favorite entry, right? And it's an entry with a little bit of patience might create a better advantage. Does that make sense, Rakesh? And I know that you're brand new, and when you're brand new, you have to make all the mistakes. And one of the easiest way to start eliminating those mistakes, guys, is to write your rules. Don't tell me that all the conditions are met. Tell me what your conditions were, and what you'll find is you'll begin putting this in there. And then, Rakesh, if you tell me that you did have strong triggers, right? I do have strong triggers in this case. Then that gets us back to a little private session for you right here in the classroom of what strong triggers actually mean. So hold on to this picture. Let me give it to you. Drop it into your spreadsheet. Look at it tomorrow morning and it's going to help you a lot. And guys, like I said earlier, you're not always going to like what I have to say, and you're going to want to be in the market more than you are sometimes. But let's get you in the market at the right point. Let's get you in where all those advantages are present and you have a higher chance of success. And then TJ, for high probability trend trades, odds favorable momentum, both small and large need to be above. I'm assuming you mean the areas, right? Small and the large need to be above the area. Yeah, so perfect. Perfect recognition. And let me give you the picture again, guys. It does, doesn't it, Bobby? Let me open up this picture for you, TJ. And guys, I share this one every day, and I'm going to share it again right now. Please steal it. These are the 3 options on areas. The first one is no clear path. And I use the language of the advantages. There is no clear path present when price reaches an area and no trigger lines break it. There is a clear path, right? TJ ready to rock and roll when both the small and the large get to the other side of resistance. It begins to act as support, and going the other direction when it gets to the other side of support, it begins to act as resistance. And then that third option, when only the small break through with that momentum, it's just saying that this area has the potential to break, but it's not a clear path. It's not a high probability trend trade. It can't be, because it's not a clear path. How about this pullback when the path is clear and odds favorable? I would have to see it on a smaller, faster chart to verify, but absolutely, that's where I would be looking. And then down here where the small triggers are below but the large are above, TJ, there may have been a divergence-free entry here. And then maybe 2 or 3 divergences takes us out of the trade when that area doesn't actually break, right? So keeping it simple, right? That's it in the beginning. You're welcome. Great question. And then TJ, we're getting into your pictures right now, so let's take a look. Here's your crude short. You say a termination creates a full reversal. The full reversal creates odds favorable. You hadn't reached the area yet. It pulls right back to a mid-band. Third divergence maybe should have gotten you out of this one, right? You know the one that I want to see, TJ? I want to see it here. I want to see that awesome entry on the first entry and look at all the room you have to go make money. But in the beginning, you start to second guess a little bit, right? You start to worry about those entries. Maybe you're not in. And you got out because of three divergences, and that's brilliant because it takes away the advantage, right? But you had three divergences all the way up here. So you got out well after the third divergence because you were hoping it still goes down. Totally cool. It's normal. And this was crude oil, right, this morning? Let's go to the crude oil chart. Oh, that was a few days ago. Then TJ, do you see how this was probably your best entry right here, right? This is the one where everything says go. And this is where building confidence in those entries, building confidence in those advantages will pay dividends. Because by the time you get over here to your entry, you've already had two divergences. Your small triggers have weakened the large, right? Your triggers become split rather than one on top of the other. And it's still a great trade. And you did a great job managing it. So let me show you how to get a couple extra bucks out of these trades. And that was a two lot, right? So you're trading two contracts. When you've already got these divergence lows in place, TJ, and your trigger lines aren't ideal anymore, that's a great place for profit. Getting it at 56, taking that $100 down here at 46, and then just get break even, because at break even, that divergence is true. And what you do is you get the opportunity to make that money to preserve your risk. And you're playing that if then. If I get three divergences, I don't want to be a part of this. And it makes your reaction time a lot faster. Great looks, though. Nice job. And thank you for sharing. What do you consider quick profits? Okay, so here you had 10 points or 10 ticks. So you're telling me that you have to go like in the ES? Cool. So 8 ticks is 100 point, or 2 points is 8 ticks, right? That's $100, or that's $50 in the ES. One of the things, TJ, that may help you out a little bit as you focus on things, right? Consistency. So how about crude oil? Are you looking for $100 in crude oil? Cool. So there it was, right? You had that $100 in the bank. And one of the things that you're going to do, and guys, everybody does it in the beginning. Okay, I like it. So let's go to the next picture. There's no reason not to focus on anything. You said upon further review, this wasn't a good bottom. That was your mistake. But let's take a look and see if the rules were met. It is. It's a termination. The mid-band's acting as a termination. And that's down here, TJ. So that's a good one. I like it. And then you do have smalls above, the larger up. But you see how you're 50-50? So it's one of those 50-50 trades. You have no divergence. You have a beautiful entry spot. And then once again, and I like this picture a lot, and I want you to recognize this, and this kind of reinforces what we saw in the last chart. TJ, if you take the correct entry, you get in on the first shot when everything is its absolute best. You're in at, oh goodness gracious, my eyeballs. It has you in at 56.50. And then there's 58.50. It looks like there's your $100 before it turns against you. And the cool thing is by taking that best entry, there's your stop right below the reversal bar, right? So learning to trust it, to buy it on the way down, getting in at the best spot, there's no reason to get stopped out all the way down here. At this point, the market's already told you that everything has gone wrong. So that's one of those things where that pragmatic, that mechanical approach, you could have been in and paid and had a minimal stop, if not already break even, when it didn't run. Does that make sense? I love these pictures because your ideas are right on the entry. Your ideas are spot on the entry. And now we just have to, through repetition, create the trust. You're still on simulator, right? Don't second guess it. Yeah, don't second guess it. Practice that mechanical approach. You're killing it though. Entries are the hard part. Or actually, well, entries aren't the hard part. Entries are the first part. And when the entries come and you're catching the right entries, it makes it manageable. Everything says up, the triggers are up, the path is clear, the pullback to support. Boom. NASDAQ overruns a little bit, right? We know that, and it's a pain in the butt. Everything says up. You take the perfect entry, stop keeps you safe, and you get paid all the way up to the trouble spot. Nice. And then it's not so pretty, right? You're going to trust it eventually. TJ, it takes time, man. It really does. So this one, love it, get paid. This one, let's see, your triggers start to turn, but they're flat, you're okay. Do you notice how your trigger lines are split? Yeah. So you lose those, and the only area is caught in between them. Yeah, no worries, man, it's good. And you started to panic. Don't panic. Nice recovery, right? Because it bounced off of that synthetic trigger and started back up. And then that final entry, at this point, we're just trading hope. So getting it. Jose, show them to me. Let's talk about all of them. Jose, I can fix you. Or I can at least increase your recognition. TJ, great pictures, man. And I love that you're aware of the fact that you're going to get emotional, because you are. And TJ, I'm going to tell you right now, NASDAQ is a colossal pain in the ass if you're not 100% certain with what you're doing. Guys, NASDAQ, I'm 3 years into the software, and I only now started trading NASDAQ. I only now started reading my charts fast enough to feel comfortable with it. I know that you guys want to do what John Novak does. John Novak trades NASDAQ. I'm going to trade NASDAQ. The problem is NASDAQ is hard to trade. Repetition, Zeba. I tell you this every time. Write a plan and practice it over and over and over and over and over and over, and stop wanting to finish the marathon before they fire the starter's pistol, right? Guys, everybody wants to be rich, but it's the process that gets you there. The process creates the results. I can't wait to see it, Zeba. Send me pictures. Don't just send me rules. Send me pictures of your rules being met. That's what I need to see. Guys, when you write a plan, words mean absolutely nothing if you can't associate them with a look, right? What does my perfect entry look like? I want to see it in your plan. Smalls below the large, the path is clear, the pullback to the area inside. That's where the magic happens, guys. There are no magic pills. Guys, this is the greatest software in the world. There's no doubt in my mind about that. And then we talked about that one. That was just emotions, right? Great job. And you say that your big takeaway was to focus on one market. I love that, TJ. Keep it simple. That's a termination condition. Price reached 1-to-1s and no trigger lines broke through, guys. How many of us are going to ignore termination conditions because we want to be in a trade? I've done it. The termination condition on your spreadsheet is probably because of me. All right, Debbie, yeah, the better trade was definitely there. But you still had everything going down. You still had a clear path. You still had the area for entry inside of triggers. But absolutely, that was your best entry up there. Nice trade, Debbie. Bobby T. Bobby T. Bobby T. Bobby T. Is the market coming from a good bottom? Nah. Odds favorable? Oh, yeah. No terminations, clear path? Not quite, right? 50-50. Would you agree, Bobby? This is not a clear path. This is the small triggers just barely eking through. And it's a 50-50 with divergence. Gosh, great recognition. How much did that trade cost you, Bobby? What'd you lose? $1,000? $1 million? 27 billion kajillion? Oh, you didn't take it because the rules weren't met, because the advantages weren't there. Cue sarcastic tone right now. Guys, Bobby, amazing. That's hard to do. That's the hardest thing to do, is absolutely nothing when there's nothing to do. Bobby, great job. Everybody can do it. I want you to say that. Everybody can do it. You can either have advantages or not. That's up to you. And then Rakesh, we saw that one. Jose trades. All right, Jose, let's look at it. And I'm going to do it like this. Jose, are you with me? Not coming from a good bottom, right? Not at all. We're coming from the middle of nowhere in what has been a crazy downtrend for the last hour and a half. Big pivot from nowhere. It does have divergence. Your first target is that mid band. And that's cool. And we set up when we're coming up and everything says up, right? And Jose, large triggers are flat. What does that tell us? That we're losing momentum, right? Favorable large triggers are strong, strong, strong in the direction of the trend. Flat triggers mean that there's no momentum. It's not there. So not only have we reached our first target, our large triggers are pretty flat. And that's cool. That's all right. And then let's talk about your entry. You're not using areas. And I'm not sure why. I'm not sure why you got in so low. Because of a high volume area? You said, well, I'll use the blue line here. So that's awesome. Or the green line here. All right. So for those of you that want to use range charts, and Jose, this is going to help you immensely, my friend. It really is. The only time market flow does anything for you, the only time that green line means anything, Jose, is if the rules are met. Ron, I'm not. I'm sitting here, I'm keeping my hands off of it. I'm wondering, my laptop is blowing onto the little adapter where my headset is. So I am going to pull that out of the stream of heat and maybe, can you guys hear me? I did the whole unplug reboot. Go. What do you think? Okay, sorry. Little love tap on the side of the screen. I love it. So what I'm going to do, it's cutting again. Nope, son of a gun. Guys, I'll be back. 1 second. I'm going to reboot because I don't think it's my headset. I really think it's Discord. Hold on. All right, guys, I'm back. Is this better? Please be better. Yep, okay. It's funny, I just switched ports and it worked out great. Sorry, guys. So, Jose, when we talk about a range chart, and for all of you guys that are trying to add more charts, range charts don't mean anything. Oh, yeah, I didn't put the video up. Thanks, Ziba. Always looking out for me. I appreciate that. Guys, range charts don't mean anything unless your rules are met. So when we talk about a range chart, if this high volume area at 15,726 was up here at 15,732 at the area right there at the triggers, well then that may be something that I added to the equation. But Jose, since it's all the way below, I'm really not. And then the next thing, when we talk about range charts, if you're going to have the information, you have reversal bars from 1-to-1s at resistance, smalls below the large, you're in a downtrend. Your range chart says no way in hell are you going long here. Your range chart reflects the fact that this is a bad bottom and it's made it to the mid band, right? And we're just not getting through. And then Jose, if you were running this synthetic trigger over here, and I'm not sure what, that may be a 21 trigger, you're 50-50 at best on this one. And guys, this looked good on paper. It did. But I think favorable large triggers, anytime my trigger lines are flat, I don't care which triggers they are, anytime my trigger lines are flat, it means that I'm losing momentum. If I'm not strong in the direction of the trend, it means that I'm losing momentum. So for me, that's a pretty key look on this one. And Jose, you say you're struggling with areas. Area inside of favorable large triggers. That's it. Don't overthink don't overthink it. Oh, but the reason I took the picture is, Jose, this chart did nothing for you. It ruined, or if nothing else, it told you don't try the long, but you didn't need it. Flat triggers is a challenge. If you get in, you take a small loser. That's cool. I could get on board with that all day long. But because it's a bad bottom and the mid band's being reached, right? And because we're at this fib, it creates a set of challenges for you. And they have to be, right? You want those strong triggers. So if they're flat, there's just not that momentum. So here's that NASDAQ, right? And that's kind of a weak look. 50-50 ends up a 50-50 that doesn't work. Divergence tells you that it doesn't work. Everything rolls. Now it's odds favorable, right? Now it's smalls above, the large are wide, the path is clear, and we can identify a window of opportunity. See the difference in the triggers though, Jose? Up strong, one on top of the other. And if it reaches resistance, guys, it's game over. If it doesn't reach resistance, we have one line inside of favorable large triggers that give us a potential opportunity. Does everybody see it? It's not, because the trigger lines went through, right? But I have odds favorable and I have a clear path. It's not 50-50. My checklist is good. Now we're getting a little pullback, right? If I took this picture right here and we took it to a court of law, and I put the rules on here, trend trade checklist, is it coming from a good top or bottom? No, but it doesn't matter, right? It adds to it. Do I have odds favorable on both charts? Yes. Do I have no terminations? Yes. Area inside of favorable large triggers? Yes, right? If you jumped in too soon, it pulled against you. Guys, this is a trade that gives you all those advantages: momentum, clear path, everything. I feel good about this trade. I'd take this trade 1,000 out of 1,000 times. And I don't know what happened. Well, look at that. It came right back. I'm below the reversal bar. I have absolutely no risk. Let me go ahead and use Fibonacci as a target, right? Guys, congratulations. That was a high probability trend trade. And it took me right out. So Rakesh, you wanted to see it live, right? That was it. Let me plot those entries and exits. What do you guys think? That was a 2 lot. That was a 385. Can I get an amen or a hallelujah? Look at how far away the smalls are for those of you worried about it. Guys, what if all you did was wait for this look? What if all you did was wait for the best of the best? And that's the point that I'm trying to make today, guys, till I'm blue in the face. Stop feeling like you have to chase everything. Wait for the best. Wait for the advantages. Wait for all the amazing things, right? Wait for the best look. Waiting for it to break one way or the other. Absolutely, Gary. Termination, weak triggers, not doing a thing. Gary, your ability to recognize problems is through the roof. It's awesome. 50-50 with divergence, right? So right now you're looking for reasons not to win. What you're going to turn that into is looking for reasons to win. 50-50, multiple divergences against small triggers. If you were going to take this entry, it had to come from the correct side of the small triggers. Right into a divergence low. Guys, recognizing termination conditions keeps you safe. Gary, you have found every one of them in the market. Every one of them today. Great pictures. These should be in your spreadsheet. 50-50 trade, divergence prints, doesn't make it to the area, right, Joel? It was so close, but not quite. Rakesh, oh, I love this. Rakesh told me that I'm wrong. Small trigger was red, Rakesh? I'm thankful for that comment. Do you know why? Rakesh, let's go back to the basics. The basics. Where does momentum come from? Momentum comes from the large chart. That large chart has to have strong triggers. Smalls above the large are wide, they're angled in the direction of the trend. Rakesh, do you remember when we talked about termination conditions? The only termination condition, the only thing that I'm going to look for on a small chart is 3 divergences, because the small chart is a refinement chart. Oh, I'm thankful for this comment. Because, guys, this is common. These small triggers, in order to get back to the area inside of favorable large triggers, these small triggers are going to turn against you more often than not. But that's okay, because this chart defines momentum. Does that make sense, Rakesh? Not really? Okay. So rule number 1 provides the advantage of momentum, right? Rule number 1 says that the market is likely to continue in the direction of the trend. Rule number 1 is where we gauge whether or not. And Rakesh, that's because you are on day 4 and you have zero trust in the rules yet. So let's do this. I'm going to go back to the spreadsheet, right? The trust builder. And we're going to look at Luciano's short. All the advantages are present on the large chart. The advantage of momentum and the clear path. Luciano takes the pullback on the small chart, on the entry chart, on the refinement chart at the area of resistance inside of favorable large triggers. The small triggers turned against him. This is what got him. That little decrease in momentum gets him back to the best of the best. John, we took it live, but we were a little more conservative with ours. Nice trade. So Rakesh, let's go to the next picture. And what you're going to find is that once again, momentum and direction and areas are defined on the large chart, and the small chart is nothing more than a pullback to resistance inside of favorable large triggers. Once again, the small triggers come against it. So if you start going through and you're looking at all of these pictures, you're going to notice that common theme. That on a smaller, faster chart, you may get that little red trigger line, but on your large chart, it never moves, it never hesitates. And this is why we use the small chart for entry, right? This is why we don't focus on the small chart until the rules are met on the large chart, and then we're only going to use that small chart as a refinement process of getting in at the absolute best of the best spot. Does that help a little bit, Rakesh? Let's see what John Novak's did. John Novak had odds favorable on the large chart. He had a little turn against him on the small chart, but he's in at that area of support inside of favorable large triggers, and he's stuck with that momentum all the way up. Nice trade. And Rakesh, this really is, it's a matter of trust. It's a matter of trusting that the large chart, do you? So let's see. And we'll go to the picture that we just went through, right? And we'll go through that whole process. So our entry is here, and our initial stop, we'll just put it outside of the triggers, right here around 52, right? That's $80 per contract. Rakesh, are you comfortable with $80 per contract? Initial stop, yeah. So check it out though, Rakesh. After that reversal bar, you have approximately $10 per contract risk. After that reversal bar, when you move your stop, because you waited for the area inside, you have virtually no risk. And I feel like risking $20 to make 400. What do we make on this one up to Fibonacci? 385. And that's kind of how we do it, Rakesh, is that initial stop, we're very calculated. We're where the market shouldn't go, right outside of that window of opportunity. And I'm going to say it really loud real quick. Thank you so much for asking these questions. Because if you sit and you wonder on the sidelines, you're going to create your own answers to these questions. So the initial stop, we're going to manage that risk. We're going to put it outside of that window of opportunity. And then once that trade begins to go in the direction, we're going to reduce risk. And you're going to find that a lot of times, Debbie, take care. And Ron, go to the beach. Have a good time. What you're going to find, Rakesh, is when you wait for that pullback, it's going to reduce your risk dramatically because you're using that window. And right now, you have an exorbitant amount of risk because this is your entry up here, and we're just going to nudge you over to that best of the best entry eventually. Great questions. Does that make sense? And Rakesh, I think one of the best things that you could do for yourself, and guys, this is for all of you that are working on entries right now, I'm going to drop my checklist in the room or my spreadsheet in the room one more time. Take tonight and click on 20 of them, right? Let's do this one. That was Joel's perfect short. Everything says down, the path is clear, the pullback to the area inside of favorable large triggers. And look at how small the risk can be. So start developing that trust a little bit, guys. You're not going to trust anything in the first week. I don't care who you are. You're not going to trust stuff in the first week. You can't. You don't have the repetitions. Hell, I didn't trust my wife in the first week of dating. I wasn't going to sit in a room with her with a loaded gun. I didn't know her that well. But eventually, through repetition, through hanging out, we get to where we're pretty comfortable with each other. All right, M, let's see what you did. Guys, you are keeping me busy. M, 50-50, right? Termination creates a full reversal. Full reversal gives odds favorable. Odds favor. Well, I thought you left, Ron. I haven't gotten to it yet. Odds favorable. He says one divergence with odds favorable momentum. He'll take it at the area and he'll get out at the trouble spot. M, great trade, great look, great advantages. Safia says, I believe in the plan and I'm going to get paid. Safia, great trade. We all took it right in class, right? We took it live. Safia has developed trust, and her trust got her in that trade and got her paid on that trade. Joel, 50-50. One divergence. It may be a little late, right? Joel might have put that trade in there a little late or just didn't get filled. Run. Bink, bink. Everything says down. The path is clear. Ron goes, hey, you know what? I can make a little money before chili dog time. Good looking trade. Guys, I'm going to let you in on a secret. If I look at 100 of Ron's trades, 95 of them at this point look exactly the same. 95 of them look exactly the same. And that's one of the reasons why he's consistent and why he's on the beach before noon. The less you chase, guys, the more you find. I was looking this morning and I was trying to come up with, you guys know I love to scour the internet every now and then. I found this one. And I typed in, this was my thing, searching for everything and finding nothing. And guys, the quote was, there is nothing like looking, right? There's nothing like looking. And if you want to find something, you got to look. You certainly usually find something. If you look, but it is not always quite the something you are after. Right? It's one thing to be looking for a trade. It's another thing to be looking for something specific, to be looking for a rules met trade. And guys, the more you chase trades, the more you chase the money, the more you chase the things that aren't the advantages, you're going to find them. You're going to find that disadvantageous 50-50. You're going to find that crappy trade into a termination condition because you're looking for a trade and you're not looking for rules to be met. Ziva, I think I did, and I don't know. Let me scroll through and see if I can find it. Will you repost it for me? I know I covered one of your trades, but I don't remember. If you'll repost it for me, that would be amazing. Chase less, find more. Finman, you got bingo as well. Nice job. Safia, patience is paying dividends. Joel, you're going to get there. All you have to do, guys, is just wait for the best, and it's a pain in the butt. Doing nothing when there's nothing to do is the hardest thing you'll ever do. And then I'm going to post this because new users, a lot of you don't believe it. To minimize your learning curve, post pictures in the class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. How will you know the difference? To be sure, you need feedback from us. Guys, you need feedback from me. Hey, Jose, Solar, Mr. Solar, J Solar. Try not to confuse the two. How are you going to know the difference? Guys, if you're brand new, how are you going to know the difference? Get that feedback, right? Ron, take care. Enjoy that chili dog. If you're placing trades on Simulator, if you're participating in class, guys, there's no risk of losing any money. The platform you're running your software on was provided to you for free. A full working copy of Nexgen software was provided to you for free. The education in this room was provided to you for free. There's no risk. Embrace it. Take advantage of it. Participate in class and let me tell you what you did right and wrong so we can repeat the right and avoid the wrong. And let's get you to where you told us you wanted to be. Every one of you ended up in Nexgen because you want to be a day trader, because you want to be successful. I'm giving you the most successful, the best software on the planet, guys. And if you find something better, let me know. John Novak will buy me a copy. He's already promised. But nobody's ever done it. 50-50 loser with odds favorable momentum. From an okay bottom. Ziba, what's an okay bottom? Is an okay bottom a bottom where the rules weren't met, but you still like the way it looks? I've never used that term. So Ziba, you have an okay bottom. You have a 50-50. You have divergence, and it doesn't work. Ziba, what do your rules say about 50-50s with divergence? From an okay bottom. My rules say don't take it. If it's a bad bottom and it's a 50-50 and divergence prints, stay the hell out of that trade. It's not likely to win. That's what my rules say. Your rules are different. And that's okay for you to have different rules. But Ziva, how many okay bottoms, 50-50s with divergence do you have pictures of that win? That's kind of what we're asking ourselves, guys. As you learn, am I giving myself the advantages I need to be successful? Boom. Perfect, Jay Solar. 50-50, divergence prints. That's it. This is it. This divergence, the second that magenta line prints, I have divergence on a 50-50. Great picture. Divergence on the 50-50, and boom, there it goes to the bottom. Jay Solar, it can be simple, can't it? Not a good bottom. 50-50, divergence prints, right? If you're brand new and you're not so in tune with the market that everything is second nature, guys, this is a plan that I put together, right? Ron. Yeah, same thing. Guys, this is my checklist that I provide new users, and I do it for a reason, right? Odds favorable on the 13-2. It's mandatory on that 50-50. Small triggers on the 5-1. It should be mandatory because you're already sacrificing a clear path. No divergence on the 5-1. I put it one time there because I believe in it wholeheartedly. I put it again down here because I believe in it emphatically. And under management, I put it again because it's my personal opinion, and my opinion doesn't mean squat, but it's my personal opinion that divergence on a 50-50 screws things up more than it doesn't. And I'm in the business of winning. I'm in the business of making money. As you grow with the software, Jay Solar, you may say from a termination condition that creates a full reversal, because that strength of Fibonacci, I may be willing to take it with one divergence, right? But this one, not only did you not have a good top or bottom, you also had divergence, right? Doubled up. You had two no's on it, and you got exactly kind of what we would expect. Does that make sense, everybody? Guys, people think I'm some sort of ass because they're like, he's keeping me out of trades. He's keeping me from making money. He's keeping me from getting into the market when I want to be in the market. Guys, I'm not. What I'm doing is until you have the ability to keep yourself safe, I'm giving you a simple to follow plan that embraces safety, that embraces advantages, that embraces the idea that your opinions don't need to cloud patterns that have been proven more often than not. So Ziba, if you had a plan written out that you had studied and practiced over and over and over, right? If you had a plan that was clear, that was concise, and you knew that your plan said that divergence screws things up, Ziba, you would be searching for that magenta line, right? And look how long he had before the potential entry. He's staring at that pivot saying, if divergence prints, I'm not taking this trade because that's my plan. So putting your attention where the attention needs to be, right? Not putting your attention on the entry because it's not time for the entry yet. Putting your attention on the pivot to see if divergence prints. Guys, this is your path. We'll do it every day, I promise. We will do it every day. Check it out. 50-50, divergence prints. I'll be damned it doesn't work. I love it. I love how simple it can be, guys, but I fully understand how frustrating it can be to get your brain to embrace simplicity. And this is why every day I start with keep it simple. This is why every day I talk about a high probability trend trade. This is why every day I gift you guys. I gift you guys the simple plan to keep you on the right side of things. Every day. This is why every day I give you 250 pictures of rules-based entries so that you can commit them to memory. Guys, I have given you the fastest car on the planet, but you have to learn how to drive it if you're going to win races. What do you mean? How do you read it? What's to read? There's a loss of momentum, Safia. That's all right, Joel. Joel, have a great afternoon. Safia, where do termination conditions come from? I'm going to make you talk this one out. Large chart or small chart? Okay. So, how many divergences does it take to be a termination condition on a small chart? 3. It takes 3 divergences to be considered a termination condition, right? Perfect. Jay Solar, I agree 100%. So, Safia, let's take it a step further. Because you're chomping at the bit, right? Is it a clear path? No, let's start at the beginning. What direction is the market going, guys? It's going down, yes? Everybody sees it. It's bright red. Safia, do I have odds favorable momentum? Yes. Guys, everybody can see it, right? Small's below the large are wide. If you get ahead of yourself, you're going to miss something jumping out at you. Ladies and gentlemen, do I have a clear path? The small are breaking through, but the large have not. There is no clear path. So what kind of trade do we call this one? It's a 50-50 trade. Ziba, there still may be an opportunity. It's a 50-50 trade with odds favorable momentum. What do your rules say about one divergence on a 50-50 trade? What do you think? Jay Solar says that he's not taking that trade. So what about 2 divergences on a 50-50 trade? Does that increase the likelihood of success? Or does it mess it up worse? So what if it were this simple? Ziba, do you see how you're focusing on things that haven't even happened yet? There's a chance for a term. Ziba, there's a chance I'm going to be crowned Miss America. It's not a good chance, though. It would take a lot of surgery and some Botox. Keep it in the moment. Keep it right now. Ziba, that green bar is so off in the distance. It's not a green bar. Go with the surgery. I would need to. It's not a green bar yet. It's a 50-50 trade, and it has the potential to break the area because of the odds favorable momentum, but divergences print. And the only reason to take this trade is because you hate money. 2 divergences, right? Really 3, because the triggers didn't even get through all of that. And small triggers, strong, strong, strong. Ziba, who cares? It doesn't matter. Stop focusing on the things that aren't a part of your rules, right? Where in your rules does it say a bendy trigger line might create a problem? Where in your rules does it say that if it creates a green bar, it has the potential to be a reversal? It doesn't. It says when you have a 50-50 and divergence print, sit on your freaking hands. Keep it in the moment. Keep it in the moment. No, they're outside of the large. They are outside of the large, Ziba, and that is the only requirement. Johnny, Why would you fight momentum, right? Why would you fight the trend? And once again, it goes back to the only reason to do that is because you hate money. The only reason to fight the momentum and the trend is because you think you're smarter than the millions of dollars trading against you, right? It's an opinion. It's an ego thing. I'm going to be first. I know because I've got a ginormous ego. It's huge, but it's mine and I love it. How to commit financial suicide. One easy step. Trading against strong triggers. Guys, that's the biggest thing that takes money out of people's pockets. Fighting momentum. Trading in determination conditions, right? That's it. Let it be in the moment. And let me show you what I mean. See, but let's go bar by bar. Are you ready? What a great way to finish. The market's coming down. The path is clear. Life is good. I'm happy as a freaking clam. I'm only looking at my large chart because the large chart leads the way. The trigger's reached, but who cares? I don't, because price has to reach an area, right? It's getting closer. Price reaches the area. The triggers don't break. Ziba, termination condition, right? It doesn't matter what may happen. It's a termination condition. Well, now my small triggers break through the area. Just barely. Guys, I want better confirmation than this. That's just me. I don't want a fraction of a micron breaking through the area. Give me some breakage. But for those of you that are black and white, the area, the smalls have broken through. So Ziba, we can say this is a 50-50 scenario, right? Notice how you don't see the green bar. All you see is strong triggers. All you see is everything saying down. All you see is smalls through, large through. Now we go to the small chart to see if the rules are being met for what kind of trade? A 50-50 trade. So this is what my small chart looks like right here. And I'm waiting for a reversal bar. And there it is. And dagnabbit, there's divergence on a 50-50 trade. Ziba, do you see how you don't see bendy triggers? Do you see how you don't see that green bar? Do you see how you don't see anything but that moment? That rules-based moment. And you can say to yourself, Ziba, because divergence printed on a 50-50 trade, it's not my trade. And that's where you have to lift up your hands and say the advantages are going away and this isn't my trade. For those of you that are brand new, it's easy to be a genius after the fact. Well, I just would have taken that second divergence and entered right here and gone all the way up to that pivot stop out and made money. And then I would have entered at that pivot stop out and taken it back down. And look at all the money I would have made because I'm a freaking genius in hindsight. What we're trying to do, guys, is recognize the looks to a point to where you are always in the moment. You are always focused on the odds favorable, the path not being, or the target not being met, and the best of the best entry to give you the greatest chance of success because you want to sit around in your living room and make money at your laptop. You want to sit in your office in your pajamas and make money on your laptop. And you want to sit on your private beach and walk into the cabana and take a high probability trend trade on 1,000 lot and make $38,000 in 18 seconds and then shut it down and go sit on your yacht. Guys, Ziba, wanting money does nothing to make money. Process yields results. Process yields results. That's it. Focusing on the process of giving yourself an advantage every time. And I want that too for you, Ziba. But if you don't have a clear plan, you're not going to get there unless it's with luck, and luck runs out. What do they say? Luck is where vision meets preparation or something like that, right? So guys, if you have not written a plan for yourself, and this is just a crazy thought, Until you have the ability to write your own plan, why not steal mine? Yeah, it's opportunity meets something. I don't remember what it is. Preparation or whatever. Why not steal the one that's in place and learn how to take these trades the way they're written, right? Why not take this? J Solar, what's the difference? Hold on, let me see if that opened up in my other Discord. I'm not sure. Can you show me a picture? I'm trying to open the link. But it's not letting me, it's not letting anybody do it. Thank you, Gary. Luck equals preparation plus opportunity. At 9:51, you're saying what's the difference? Oh my gosh, you're going to make me scroll all the way up to the top. Let's find out. Got you, got you, got you. 9:51. 9:51, 9:51. Almost there. Whose chart are you looking at? Is it Paul's? Is it this one? I think that's the only 9:51. Yours at 9. Can you just repost your picture? I don't have one. Is it 10:51? What time frame are you in? I'm on Eastern, so 51 for me. Is it this one? What's the difference? No divergence. That's the difference. No divergence. Look what happens. It's just silly, isn't it, J Solar? Go back and look at all your 50-50 trades. Well, that's okay. So J Solar, you want to talk about management on this one then? Yes? Odds favorable, no divergence, perfect entry. So here's your first trouble spot, right? That area that hasn't broken yet. Does that make sense? What a great spot to take the first profits. Do you agree? And you nailed it, just above it. I love it. So when you get to this area, is there any reason that you can't go break even, right? If this area creates a bounce, you're protected. Does that make sense? But because of the odds favorable momentum, because everything is screaming down, because the smalls are still outside of the large, and once they work in, they're working down anyway, can't you let that second contract run just a little bit, right? Maybe you say I go to the next key area, or if divergence prints, then I'll exit, right? Or maybe you'll just say I've already been paid on the first, and I'm just going to shoot for that $200 profit target, maybe a little more, and then I'm going to get out and I'm going to wait for the next best opportunity. But this is a beautiful trade, right? It's a little bit low. You didn't wait for the area. But the management's great, right? There's your $100. That's a $200 trade. Goodness gracious, J Solar. If that's all you did every day, you're making an extra $1,000 lunch money, right? Extra forward. That's almost $50,000 a year on this trade based on the results from having the advantages. It's the process that yields the results, right? And then J Solar, as you become more and more comfortable through repetition, the likelihood of you holding for larger profits goes up, right? Because now you're getting comfortable with that odds favorable momentum, letting the large chart lead the way. And the large chart says we're not done. The large chart says we're still going because we've got all this momentum and we are hauling ass. Does that make sense? Great question. That's okay. Jay Solar, can I air your dirty laundry on why it took you a year to get it? Because you didn't participate in class, because you tried to do it on your own. And we've got 2 weeks of you showing me pictures, and you have lights going off in every direction. Thank you for giving me the opportunity to help you. That means a lot. Ziva, great job today. Thank you so much. Guys, we ran over a little bit. That's all right. It's my class. Holy termination conditions. You guys have an amazing afternoon. I'm going to be back tomorrow morning at 9 a.m. and we're going to do it again. New users, I want to hear from you tomorrow. Tomorrow's Friday, right? Yeah, we're going to do it. Oh, Johnny, you're a great student, man. I love to teach. Teaching is a passion for me, and everything I do and everything I've ever done, teaching has been an absolute passion for me. And it's hard to frustrate me, and I get excited about you guys getting results. So I'll take it easy on you. You take it easy on you. I'll see you guys in the morning, and we're going to do it again. Take care, everybody. Thank you for that. I appreciate it. Be good, guys.